So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the.
Howdy guys, Tony Denaro here. Welcome back to the channel. Thursday, February 2nd. Hope you guys are all having a great evening. What a great day in the markets today. Somehow, guys, I survived the Blizzard-geddon of Texas. I'll get into that in just a second. I want to introduce Stock Retail to you guys. Maybe some of you have heard his channel. If not, I put a link to it down in the video description. He's been doing some great DD that I think we need to get some exposure to, especially since if I don't, I'm going to have to do the same video. He already covered it. Welcome to the channel, my friend.
Hey, Tony, and hey, everybody in this community. Thank you for having me.
All right. What part of you're in the United States? You and I haven't really spoken before.
Yeah.
I just reached out to you this evening. So tell us whatever you want us to know about yourself.
Sure thing.
Background, and then and we'll get more into your video here in just a bit.
For the sake of your audience, I know I was telling you just before we went live here, just everybody, sorry, I'm not showing my face. If you haven't seen me around, I've been on Twitter for the whole 2-year journey here. So I'm not new to AMC, but I am fairly new to YouTube. Just had spent a lot more time kind of Twittering and a little bit of Reddit. But lately just had some things to say that are a little tough to fit in a few Twitter tweet storms. So that's why I took to a few videos recently. Just my background, I kind of shared, I worked at sort of a Dow Jones level company for 21 years. I'm not there now. I'm in a different role now, but that gave me a little bit of exposure across business. Doesn't make me a market expert by any means, but if you guys are like me, we've all learned an awful lot about the markets during this journey. So yeah, kind of my background. I guess a couple personal things. I'm in the Pacific Northwest U.S. So I'm in Oregon, near the Portland area, and 3 kids, wife of 23 years. So we got 3 kids and the dog and the SUV and all that kind of stuff. Yeah, just good to come here and talk to you.
All right, guys. You guys know the drill. This is an opinion program. You're going to hear my opinions. You might not agree with them. You might hear Stock Retail's opinions and not agree with it. I don't even know what he's going to say other than the extent of the videos that I've watched, which I thought were some good work. So as always, keep it professional. Part of being an investor is being willing to listen to other ideas and discuss them as adults. We don't do the drama here. We don't do the name calling. We don't do the personal attacks. We talk about due diligence and our own ideas. And hopefully we accomplish that goal here tonight. Both with you and the audience and the guest.
Yeah, sorry for interrupting, Tony. I guess the other thing that I didn't mention, and I'll follow your lead on what we want to cover. Definitely could cover some of the DD in the videos, but also, I'll say I've got some interesting stories from along the journey from having kind of been on the Twitter ride side of things. So if we want to swap a couple stories, we can do that too.
Yeah, we certainly will have time to do that. Let's pull up just a chart real quick, just to level set where we're at today. Let me get my AMC and APE chart up. Hang on one second. Let me go to the hourly and I'll put it on the screen. What a fantastic day in the market overall, at least most of it today. AMC up. It went all the way up to 645 today, closed at 608. You guys can see that, right? After hours, it went up another 1.97%, closing at $6.20. And APE went up 10.5% today, closing at 288. And then, is that right? 283, up another 1.4% after hours. So we held that well throughout the day. And the other chart I want to put up, which is just like blowing my mind, is the Ortex. Let me get that screen up here.
Yeah, that's crazy.
Ortex, where are you at? Here we go. Couple things to point out here. Short interest has been pretty consistently around 21, 22, 23%. You can see right here at the top, we got 22.82%. But this is what is blowing me away. All right. Cost to borrow average, 591%.
It's
Cost
insane.
to borrow max, 905%. And cost to borrow min, 7.26%. So the one that I really focus on my channel is the average, because there are many lenders.
Yeah,
Every
same.
Ortex, guys, the data on Ortex is coming from lenders, not from the shorts. So these are what the lenders are charging people that want to short. All of this data comes from the lenders. This up here in the top right-hand corner, and I see many people talking about, oh, there's 0 shares to borrow. Almost every data source that I've looked at, guys, Stonka Tracker, Chart Exchange, Ortex, when you're seeing 0 shares to borrow, one lender. You're looking at one lender out of dozens or maybe 100, and that is Interactive Brokers. It has an API these guys can tap into. So please don't ever be misled. It's interesting for me to see that there were 0 shares, but I know that was one lender. There's always shares and has them. How much are you willing to pay for them? And the fact that I know someone has a lot of shares is because the cost to borrow min down here for someone is only 7%. So kind of keep that in mind when you see this clickbaity stuff. Gary Ginzer, Gary, there were 0 shares available. How did the short interest go up? Because your people don't bother to explain to you 0 shares was at one lender out of the entire set. What do you say, retail?
Yeah, there's a few thoughts on this. This is certainly something I've tracked day in, day out for 2+ years now. First of all, I agree with you. I like looking at the average cost to borrow, because we used to see this get manipulated to try to throw the number off. Like you said, if you look at one lender, they might say 1% or something, but then the other, whole bunch of lenders might be much higher. So cool to hear that you kind of look at that the same. The other thing I was going to mention, I know I talked recently about the idea of fully paid lending. I did a video on that, and basically I had talked to my broker, and I actually validated the cut they'll give me if I loan shares to my broker is, I think it's getting around 62, 63%. I haven't checked for a few days, but that's the last I saw. So sometimes you wonder, like you said, if some of this is clickbait, but because my own broker is telling me they'll pay me just my cut, not the part that they'll keep, is well above 60% now. And that's actually paid daily. So you kind of divide by the 365 days. So that tells me this is real. This cost to borrow really is spiking, and they're really paying this.
Yeah, they are. I mean, we check several different brokers for folks in my Discord that have shorting accounts, and we can see on numerous brokers what they're offering to pay. And to be fair, not all of them are showing 600%, but we are seeing the amount they're willing to pay go up and up and up. So I think this is legit data, and it is super exciting to me. And if we go back to the chart, I know you guys want to hear me say it. Are we getting close to a squeeze? Are we? What do you guys think? With the market being super bullish today and the cost to borrow being so high, I mean, we are at a point, I think, you guys know I hate making speculative guesses, but this is one of the best setups that we've been in a long time, as long as the market continues to go up. I have a thesis on that. Speaking of, we were talking about thesis right before we came on.
Yeah.
My thesis is that the reason that this run up is is happening right now, not only because the market, the market's going a little more risk on. I've been talking for the last year about rising interest rates. The market goes risk off. Big money comes out of all stocks. You've seen everything fall. But once we know that Chairman Powell is going to start flattening out rates, economic indicators are showing that things are reaching some point of equilibrium where we're not going to have massive rate increases every couple months. The big money start saying, okay, well, we can start coming back into some stocks. We got that in play. But what else do we have in play right now that could possibly be making this stock go up? Could it be a vote on March 14th? Could that be a factor? Or is this just happening randomly? What do you think, retail?
Well, I just dropped you something in the DMs on Twitter real quick. If you want to show that, we could go through that. We don't need to. I'm fine without going through that. But basically, I did a comparison a little while back. As I've just been meeting you, it seems like you and I are fairly similar. We like to go back to data. We like to go back to facts. I just took a look at.
Let me put this screen up.
Sure. And this is going to be, I don't know, a week or a week and a half old data or something. I don't know if people can even see that. But I was curious for myself even, we get trolled a lot. You probably get this on YouTube, Tony. I know I've gotten this on Twitter a lot, where it's like, give it up, stop hyping, the squeeze is over. The squeeze was when it ran to 72 and all that. And so I thought, all right, fine, but what does the data tell me? And I guess let me zoom in on my screen. Here, I'm going to go look at. But, if you look at almost every metric that we think kind of, I'll call it, makes something squeezy. So like short interest is higher now than it was then. Cost to borrow is higher now than it was then. And you can see the cost to borrow.
Cost to borrow is now like 900% max instead of 300.
Wait. I mean, look at the cost to borrow when we ran to 72. The average was 10.
Yep.
That's right there in that second row. But like, guys, the average was only 10% at that time, and the max was 39. Daily box office, you can just see. So basically, I don't know. I don't need to bore everybody and go through all these, but if I look at any metric that I think kind of has to do, maybe I'd draw everybody's attention to that days to cover line. It's the next to last line. Again, this data is like a week and a half old now, so we'd have to refresh. You had Ortex, you might be able to see it there. But days to cover when we ran to 72 was only 2.1.
I'm going to add two things to your chart.
Yeah, go for it.
On the positive side, to bolster your argument, the other thing that not only just looking at concessions and debt, but the amount of movies being shown in this year is drastically different than coming out of 2020 into early 2021. I mean, the revenue and the number of movies, I see you got box office there, but it's only going to get better every quarter that we go throughout this year.
Now we're talking, Tony.
Steven, what's up, buddy?
Hey, nice to meet you, Stock Retail. I'm just here as a support.
Yeah, hey, Steven.
The other thing that I would add, just as a negative, because I know the bears watching are going to say, but Tony, you're not telling them that there's all that stimulus money in 2021. That's a fair argument, right? A lot of people are getting squeezed themselves right now with the recession, and what's the word I'm looking for? Everything's more expensive. So, and the government's not handing out $1,000 checks every week or every month, however much y'all were getting. So we have that working against us, but we have so many other things working for us. And we guys are the small player in this play. Retail, even though we own the biggest percentage, we can't inject tens, hundreds, millions of dollars into this stock every single day. Institutions are looking at these sort of fundamentals that Stock Retail has up on the screen. And that is what we need to win them over to get the price moving, and then FOMO will take over and everybody will want to be in the play. As the shorts start getting squeezed out, it becomes this avalanche that moves uphill, as you guys know.
Yeah.
Lucid, anybody? What else? What ran today? There were several this week that just started running out of nowhere.
MSGM, Tony.
Yeah. That's it.
That's a big one.
It ran from like a couple bucks to $80. Guys, once the train starts moving, everybody wants on the fucking train. So we got to get the train moving, and we've been lacking that catalyst. But we got so many freaking little fires started here that it's just going to take one more to start a bonfire. So I'm super excited.
The other thing I sometimes watch, this is more like longer term, and I definitely don't mean to like hype too much here, but when we start crossing some of those different moving averages, whatever time frame you like to look at, I have a feeling you're a little more technical than I am, Tony. I kind of come more from a fundamental side, which is why I lean there. But I know I still have learned enough about the technicals for a while, and a lot of the day traders get involved when we start crossing like the 20 and the 50, and boy, we're looking good on crossing those lately.
Yep. Yep.
Which brings volume. I'm bringing that up because of the volume comment you made. Too.
I'm constantly, when I'm on here looking at different plays, whether it's day trades, swing trades, or long-term plays like this, I'm looking at different intervals, the 1 minute, the 5 minute, the hourly, and the daily, and looking at the shorter time periods and the 60 and 200 days. So all of those are very good for doing some sort of technical analysis. Now, I don't do any sort of algorithm prediction. I think that is, I don't find that very useful, but looking at technical indicators definitely can give you some idea about what most other traders are thinking, because those of us that look at those, everybody's got the same mindset and things tend to move based on that. And the algorithms, to be fair, they're looking at the same thing. They're just reacting faster than we are.
Yeah.
Algorithms don't, most of the time, don't care, unless you're the Sith Lord, the devil, as some like to say, where you have an agenda, you can try and push something. But most firms are competitive with each other, and their algorithms just are trying to make the firm money that day. They don't care what direction it's going. They're going to milk out the profits like a stripper. You got money in your pocket? I want it. All right. I want to go through Retail's video, but before that, I just want to catch you guys up. Sorry, I have not been online for the last couple of days, but we did have a big ice storm here in Texas, as I was afraid that we would. And finally yesterday the rain came and then it froze, and we must have the weakest oak trees in the world here, because when we get ice, do you guys have that in your state up there in Oregon, or you guys up in Maine?
Yeah. Well, go ahead. You first.
When we get ice, everything breaks. All the trees. I had trees fall on my car. My front yard is full of, I had chopped them down today, but 20, 30-foot limbs that broke off. I drove through the neighborhood last night to go get my wife some hot food. I found one restaurant open because everybody lost power, and the trees were sagging so far down in the 20-foot wide street that they were scraping the roof of my car as I'm trying to sneak out of the neighborhood.
Oh man. Yeah, it can get pretty bad here because we're not too far from the Pacific Ocean where I'm at, so we're only like an hour inland. And so the problem is it doesn't really usually get cold enough for us to get much snow, but every once in a while you get that Arctic air that passes through, and then we're getting the moisture hitting us kind of coming from Hawaii basically. But if the Arctic air comes down, and then we get this stuff called freezing rain, which sounds like kind of what you got, and it just cakes all the trees and everything, and limbs start breaking. This last winter, like right after Thanksgiving, we had 100-foot cedar fall in our yard. So I'm still out there chopping. Shit. Yeah, thankfully I own a chainsaw, so I was out there kind of dealing with that. But
well, I know KC lost power in the morning yesterday. I was fine, and last year when we everyone lost power for a week, I was fine. So I felt good about yesterday, but then 1 o'clock in the afternoon, sure enough, I saw the lights start flickering. 1, 2, 3, and then boom, everything went out. And I got immediately a message from the power company. It popped up on my phone, said, we should have your power restored by 3:30. I was like, all right, that's no biggie. And then, nothing. And it started getting dark and no power. So I got firewood and a wood burning fireplace. We just pulled the couch up and we had a little camp out.
Nice.
And milked the batteries on my iPad and phone and my wife's phone. And then we had a nice little setup for sleeping right in front of the fireplace, because it was going to get down below 50 in the house, which is pretty chilly, but it was toasty in front of the fireplace. And then at 1 a.m., right when I'm falling asleep, the power comes back on.
Everything came on. Yeah.
So thank you. I put out a tweet today. Thank you to the linemen, all you hardworking folks who do that shit in the freezing cold. It was below freezing last night. And
I know one of them, and they work their butt off.
Shout out to Grandpa Barney. Grandpa Barney is a lineman, and so I have a special. And Scarlett's dad and her brother are also linemen. I appreciate all that hard work. All right, let's, before we get into your video, let me see, guys, if you had an important question. I've not been looking at questions or comments yet. If you got an important question that you think I must answer before we move on to the next topic, feel free to drop it in the chat right now. I'm going to watch chat here for a second. Doc Zena, what's up? Hallie, Jack Wolf, Blazin, Brave Scar. We have any mods working tonight? I haven't been looking. Dream of Stuff says, Tony, will you play puts on AMC after reverse split? I have talked about that as a possibility. It's something I'm going to analyze. We'll get into that later tonight. Why would he ever talk about buying puts? If, guys, I'm just saying, if you think there's a risk after the vote of the stock price going down, you see all those puts loaded up in the option chain right now. Those are people that are hedging their portfolio. I don't think that that is a bad idea to consider. I have not bought any, have not made up my mind. And I bet you that the IV on those is through the roof. If you think it's a good idea, someone probably already beat you to it. And I bet at this point that the price would need to drop so low that I'm going to say, fuck it and not buy them. But I will look. And when I do, I'll let y'all know. I haven't looked yet, to be quite honest.
I bought puts once or twice, in particular early last year, early 22, when from November, you remember, like we just started going down pretty hard for a while there. And I've said before, I don't recommend, but I'm really, truly all in. And I've realized from a risk management standpoint, I cannot in good conscience recommend that to anyone. So
I've looked at it. Yeah, I've looked at it a few times when I was, when we were at higher price points and I was worried about going down, and the return on buying them wasn't enough for me.
Well,
to do
so
it.
that's what I was going to say. There were a couple times where I got in and got out of them really quick with some side money, and then used that to add to my shares. So it's not, buying puts is not the same as shorting a stock, and so I don't personally feel like there's you're not fighting the ape movement or anything like that, in my opinion. Especially in that case, like you said, I was hedging against my own losses, and that way I could keep my shares. And
by the way, guys, when we see hedging, just to clarify, if you guys are not options traders, the way that we look at this as traders, if we want to hold our AMC no matter what, but we don't want to wake up in the morning and see it down 30%, which is always a risk after a dilution event. I'm not worried about the reverse split. You guys know, if you've followed my channel, I'm more worried about dilution always in any play than a reverse split. Reverse split mathematically does not change anything. You'll be in the exact same position, but dilution can cause some market pressure downward. So you might say, well, I don't want to sell my stock, but I also don't want to wake up and see it down 30% over the next week. You could buy a put, and as your stock is falling, you're making money on the put, and that kind of softens the blow. You're making money, and you're still able to hold your position, and you remain cool, calm, cold-blooded, and emotionless because your net position is you haven't lost anything. Or if you have lost something, you've offset the majority of it with puts. That is how pro traders do it. That's how big institutions do it. That's what hedging is. It's not shorting the stock to buy options. You're protecting a position. If you're short a stock, you might buy calls to hedge in case it runs up the other way. That's the long and short of it. But more on that in another day, another video. We're 2 months off, month and a half. I haven't even looked at it yet. How much they cost?
You mentioned the reverse split. I told you before we were live, I watched one of your videos. Do you mind if I hit that real quick, or were you saying you wanted to talk about that a little later?
No, I think we should talk about that first, because I'm seeing some questions pop up. I think we should run through really quick, and I'll let you do it, Retail. I've already done it 3 times.
Oh, have you?
4 times in the past week, and I'm
I'll
guessing by talking to you that you'll probably do justice to the way that I would explain it. So tell us how the reverse split and the vote is going to work, because I'm seeing a lot of misinformation out there.
Well, I think the main thing was, and so I was, I guess for everybody out there, I was telling Tony right before we went live, just kind of almost as a mic check, and I said, actually, I had watched one of his videos the other day. And it was interesting timing, because I was literally thinking to myself, you know, a lot of the reverse splits that I've seen, it's like biotech stocks, or it's just maybe, I don't know, speculative stocks that are companies that don't have a real strong underlying capital structure or fundamentals. And so I was kind of wondering to myself, well, what happens if it's a bit, you know, like what if a Tesla was to do it, or an Apple? That would probably go a lot different. And so sure enough, it was interesting. You know, Tony, I'm really just referencing your work. You kind of did a stock filter and looked at a whole bunch of reverse splits, and then started looking at some of the bigger companies. And the data tells kind of two different stories, which kind of matched what I was wondering, which was basically, you know, all those tiny penny OTC bio stocks, when they reverse split, a lot of times they're in trouble, and they're already kind of in a really weak spot when they do the reverse split. So it doesn't necessarily fix the underlying problems. Whereas in my opinion, AMC is a recovery stock, you know, outside of the squeeze. So there's the squeeze and the recovery play kind of acting with each other. And, you know, a company that's getting stronger that then does a reverse split, you know, may go very differently. And you found the data that actually kind of told that story.
I get so fucking tired, pardon my French. I get so tired of people coming in the chats, and there's this one guy I see him on everyone's channel saying the same shilly message over and over. Every stock that reverse splits goes down. Show me one example of one that went up. Okay, well, watch my video. I showed you a bunch of examples. But Tony, you tell us every day that reverse splits are bad. You've said that every day for the last year and a half, because you guys always ask me about penny stocks. And reverse splits on a penny stock ain't going to do shit, guys. It's going to, a stock is in a penny stock status because it is fundamentally flawed, or trash, as I like to call it. It's trash.
You know what comes to mind? Sorry, I think I'm interrupting you though. Go ahead.
When a reverse split happens on a trash stock, a penny stock, with many of them have no revenue, they have falling revenue, worse and worse. I've seen some where the owner is writing personal checks to fund the bills of the company. Guys, these are trash. Reverse split is not doing anything for them except buying them a few more months of life on the big board. So I always expect those to fall after a reverse split. But then you get into the video I did a week or two ago about what happens to bigger companies that aren't trash. Maybe they're just having a momentary issue. What happens if they reverse split and then fix their fundamentals in the ongoing months? I showed you 15, 20 examples of companies that went up 1, 2, 300% after a reverse split, comparable in size to AMC. So I don't want to hear anybody on my channel asking me to show me one company that went up, because my work, my DD is out there. Go watch it.
That's why I was kind of, and you know, again, sorry for not showing my face, but I'm over here smiling because I was literally going to go do the work to pull together a list because I was curious for myself, and I was like, oh, he already did it. So just thank you. That was a good list. And then I was
go ahead.
Well, I was just going to say, as you were talking, and I think you kind of referenced this, it was giving me kind of a metaphor in my head. It's like if you were in a job where things are going terrible and your marriage is terrible and everything, and you just like move to a different state. You know, there's this concept that a lot of times you didn't fix your problems moved with you. And so I think that's what you're describing in many ways, is like companies who are just full up with a whole lot of problems, and, you know, reverse split doesn't fix your actual business. Whereas, you know, my voice on Twitter and a lot of my DD has been around the actual business of AMC and how it's turning around. And even there's a lot of pieces, maybe I'll kind of do, now that I have a few more people kind of seeing who I am on YouTube, I may share again. I can pretty much prove with data that AMC's underlying business is actually stronger than pre-COVID, which sounds sort of crazy because we're told the opposite by the shorts. But, you know, I'll give you a couple examples. AMC actually pays less rent, and you can like validate this in all the financials per quarter than they did pre-COVID. They have, you know, higher per ticket sale, like per person. We pay more for our tickets than pre-COVID. They're giving less of their cut back to the studios. The studios have given a little bit back to AMC since COVID. So there's a whole bunch of things in the underlying that as soon as there's enough movies, you referenced there being more movies now. As that happens, if you think about like the Hollywood supply chain, I'm actually a supply chain guy, that now that the fundamentals are actually better than pre-COVID, as there's more volume of their business, it's they're going to be profitable. I feel very strongly about that.
Bill is saying, and Dan, I got your question saved. I'm going to come back to you in a minute, Dan. Bill says, are those good stocks manipulated like AMC was? But some of those stocks that had the reverse split were not in good shape, Dan, Bill, and they went down for a little bit after the reverse split. But then if you watch my video, I talk about when they started improving their fundamentals. The reverse split had nothing to do with anything other. It was fixing the fundamentals that enabled these companies to run up, and having a lower float at that point because of the reverse split probably helped. So that segues into the next thing that I just want to hammer home. My belief, and you don't have to agree with this, but I've been saying this for weeks, fundamentals fucking matter. Why is AMC manipulated, if that's the word you choose to use? Why is it shorted, is what I say. Because we got a target on our back, like many companies with some messed up financials. We got $5 billion in debt on the balance sheet. We have negative earnings per share. We have negative operating income. Guys, this is not an ideal picture. There's no way to sugarcoat it. I'm not going to blow smoke up your ass. And you should know that by being in this investment for so long. If you have not looked at the financials, why are we being shorted? Why are we being targeted? Open up a financial statement and read it. How do you stop that? The way that Adam Aaron and the board is trying to stop it by improving the balance sheet right now. That is the vote on the table to have the opportunity to do a real cash raise. And this segues further. I feel I feel like I always talk about Donald Trump can never stay on topic. He segues from thing to thing. I'm not using him as a role model, but I just reminded myself as him. I'm doing nested ideas here now. Where was I going? I already forgot what I was going to say.
No, you might have my disease. That happens to me all the time.
I was talking about what the earnings, the income statement, the shorts.
You were making the case fundamentals matter, and I would agree about that.
It'll come back to me.
Gotcha.
Anyways, we must improve the fundamentals. That is the vote that's on the table, and we can count on the SEC. Like we've been banging Gary Gensler's drum for 18 months, and jack shit has happened. So, do you want to keep doing the plan that we've been on? I would submit to you that you're going to say it's working right now. It's working right now because a yes vote is a possibility on the table. You've seen AMC and 8 both go up since that vote got out there. Why? Because they know that AMC now has a real chance at a higher price with a lower float to raise money. That's a meaningful difference than APE. APE did not work out. And for anybody who says Adam Aaron planned for it to go to 60 cents, I've heard people that are bullish on the company say that was his plan. I'm like, what are you smoking? No CEO wants to see 40% of their market cap get drubbed down to 60 cents. You're smoking crack. That was not the plan. That was a mistake. I think he counted on retail supporting 8 more than they did. And, water under the bridge. I'm not going to keep on dissecting that. We got a new plan in front of us. It's up to you guys to decide. I'm not here to tell you how to vote. But tonight we're going to talk a little bit more about what happens with a yes vote or a no vote. So hopefully, Bill, that answered your question. Are they manipulated like AMC? I don't know. That is one thing that I did not look at. It took me all weekend just to do that one video. I didn't pull up short interest from 2 years ago on every single one of those stocks. But fundamentally, and Wes Christian will tell you this, Share Intel will tell you this. The number one way to get shorts off your back is improve your fundamentals. You can ask them. I've heard them say it. Wes Christian and Share Intel. I'm not just like spouting bullshit because I'm pushing a narrative. This is common sense, guys. From a finance perspective, we're being targeted because the fundamentals are weak. The financials are weak. So now you have in front of you a chance to keep on doing the same thing by voting no, in which case the company will be forced to continue selling ape. He's going to need to create a few billion more ape now if you vote no. and the price will drop right back down to below $1, 60 cents. and then well, let me just finish this real quick.
Yeah, go.
What's going to happen then? You're going to allow institutions like Antara to buy up billions of shares for pennies on the dollar and own billions of votes and knock you out of your seat as the primary owner of this company. Retail will no longer be the primary owner, and you let them do it for 60 cents a vote. How much should you pay for your vote? $6, $8, some of you 30, 50. You're going to let someone come in and steal it from you for 60 cents? But these fuckers that are telling you to vote no have no problem with that. Just keep on doing that. Sell all our votes for 60 cents. Does that sound smart to you? It doesn't sound smart to me. On top of that, let them dilute ape. It doesn't matter. It does matter. Let me just show you in a picture one more time. I haven't done this for a few weeks, but you can do this yourself. You can go to the income statement. Besides the fact that you're selling your vote cheap using ape, you go to the income statement, look right down here. What does it say? Average shares, 1 million. This was last quarter. That's about 500,000 AMC and 500,000 ape. Well, what do you mean 1 million? You mean those apes showed up on AMC's income statement? I thought they didn't matter. No, they matter, guys. Next one is going to show 1.5 billion. And your earnings per share, net loss per share, diluted. This is the formula for diluted earnings per share. You can go Google it. Every billion more of ape is going to dilute earnings. So when we get positive earnings, it's going to be even lower and lower and lower and lower the more they dilute it. So by every measure that I measure dilution, which is how it shows up on the income statement, and losing my vote, ape is horrible right now at 60 cents a share. What were you going to say, Retail?
My turn to forget, I think. But there's quite a bit of that I agree with. And I know what it was. I told you guys I kind of came from the corporate world. Now I'm a little more on sort of an industry analyst role. But one of the things we would talk through, like I would, I don't know if you know what S&OP is, but sort of where you're aligning different functions in a company, like say finance and sales and supply chain. And so I would facilitate some of those meetings, and you'd always have an option when you're making a big decision, which was do nothing. That way you could kind of analyze, all right, in the do nothing scenario, what happens to us? And in the scenario where we do something else, and then you can compare those. And for me, that's kind of how I'm thinking about the no vote. It's really a do nothing scenario. It's continue where we are now. And so then and that's why also out on Twitter and out on my channel, I'm kind of saying, I invite people to, and it's okay if you're no vote. I mean, I'm going to be honest, I'm a yes vote, but I can respect that some people will disagree. But at least to say to yourself, I'm not just saying no, I'm saying yes to something. And I'm saying yes to continuing with him needing to use ape. He's not going to be done selling it. They're going to need more cash, in my opinion.
I want to hear someone that is a strong advocate for no. Tell me why diluting ape makes sense in relation to giving our votes away and what it does to diluting earnings per share. Make your video explaining that to me. That's my challenge to all the people pushing the no vote. Give me your best financial analysis of how diluting ape is not diluting AMC. Because I've been talking about it since August, how it is, and I've yet to see one response. Instead, they just want to attack me personally because you got no response. Challenge laid down one more time. Get your videos done, ladies.
Tony, you came with the fire tonight. You're ready.
I'm sick of this. I'm sick of the bullshit. But I remember the other thing that I wanted to talk about tonight. I put out a somewhat inflammatory, Tony Denaro is being inflammatory. An inflammatory tweet that said, if you're voting no, you're voting for bankruptcy. All right. That was purposely inflammatory to catch your attention. I agree. I admit it. AMC is not going to go bankrupt. I've been saying that for a long time. Ape is a ticket to keep on raising money. But the idea was that he was going to sell it and we would, prop the price up and be able to raise a lot of money. But that has not worked out. So even though bankruptcy probably is not going to happen in 2023, he can keep on selling. He can keep on selling billions of ape. He can create 4 billion more off of the preferred shares that are currently in existence. And that'll be plenty of money, even at 50 cents, to get them through
Yeah, I wonder if
2023.
we explained the 4 billion.
I think
Is your
everybody
audience-
I think
okay,
everyone understands that
Okay.
that ape comes from preferred shares, and he's got
Yeah, yeah.
40 million preferred left, which would give him 4 billion more ape. That he's got, and he doesn't need to ask us, and he will do it because they need to raise cash. If the no votes win, I can almost promise you're going to see a couple billion more ape issued into the market, or at least a shelf offering saying he's going to do it when he wants. And probably 2 billion to start, and he's got a total of 4 billion. So if you're thinking you're going to vote no, and no one's bothered to explain that to you, that ape is going to be diluted the hell out, and like I just showed you on the income statement, that's going to wreck your earnings per share. That's going to sell out your votes on any future vote. You're going to be handing them away, your votes, at pennies on the dollar to someone else who's got millions of bucks to come in and buy all those votes. I don't like that idea. But bankruptcy, I'm going to change my phrase. Bankruptcy is not really on the table. They can string it along by selling billions of ape. All right. So fair disclosure, we got that out of the way. The other thing that I want to talk about is I hear a lot of people, and I've even said it myself, we're kind of speaking metaphorically, right? I even put a tweet out from I think it was a Marketplace article talking about this guy. I quoted a sentence out of his article that said AMC has the potential to raise up to $22 billion with this proposal. And I did the math on that. That's the if the float increases authorized shares to 550 million and the float is 140 whatever, that let's just say that gives him 410 million potential shares that he could sell. I don't know how many he'll try and sell, but potentially. And if he were to capture a maximum price on day one on all of those shares of $53, that would be 22 billion bucks. Now, is that realistic? In my view, no, not at all. That was like a extreme best case scenario. He's not going to raise 22 billion bucks.
Yeah, I kind of
right.
Sorry, go.
Do you agree?
Yeah, exactly. And for the purposes of making a case, the video I even just uploaded today, I talked through something really similar to that, where it's like, well, if you could sell all of this at today's price, here's how much, in theory, the max access to capital. The reason I felt okay doing that is because I do it on sort of both sides of the ledger, if you will. Like I compare the left. So I did that for the no vote. What's his max access to capital, and without any price impact of dilution, and then the same on the right. But I'm with you. If he obviously goes out and sells, a couple billion shares, they're not all going for today's price. That's not how it works.
Of ape, you mean?
Well, or even after the reverse split, like if he says, "All right, we're going to go debt free," and he goes to pay a bunch of shares, there's an impact to the price.
So, so I'm not worried about the reverse split, but I do think there is a risk, a chance of the price going down if a dilution event is announced, and that's just based off of statistics. Like every play that I look at, when dilution is announced, the normal reaction from the market is they send the price down a little bit because they are diluting the value of your shares. That's just common sense.
We saw early. I guess this is it. I could tie it back to fundamentals, but there's a revisionist history on. I don't know, Tony, when you got into the play, but around Mudrick, you guys probably some of you know that story. And actually, when the Mudrick shares were released into the marketplace, that's when we flew. You can go back and look at that was preceding the run to 72, basically. And I think some of that had to do with people, and I keep using this phrase, access to capital. Like at that point, people said, okay, wait, AMC actually is not going bankrupt because they've generated the cash. So yes, it was dilutive, but it also had this reverse effect as well on pushing the stock up because now they're strong. So there's kind of a balance either way.
That's the part two of what I was going to say. The price. No, I mean it's a great setup. I've been saying this in my Discord every day. Like you guys need to expect that if there is a dilution announcement, there's a good chance that the price could go down. but it might not, because the market is also going to know there's a good chance that he's going to raise billions of dollars. And what is that going to do? Is he going to pay off all the debt with that? Well, I can't tell you that. I used that phrase. He's going to pay. And you hear people say he's going to pay off all the debt and we're going to be debt free. Guys, nobody knows that.
Yeah.
Because we don't know how many shares he's going to dilute. We don't know what average price he's going to get for them. But we can, I think, safely use the phrase, I'm going to start using this one now. Instead of saying paying off all the debt, I think a more fair way to look at it is what I call balance sheet improvement. What is that? That means having a couple $1 billion of cash on the balance sheet, for one example, or having a bunch of cash plus paying off some of the debt. Like I'm a big believer there are some good uses of debt. There's no necessity to pay off all the debt. That's a nice to have. If he raised $10 billion, if he wanted to pay off $5 billion in debt, be debt free and have $5 billion in cash, I say go for it. But if he raised only $2 billion and he wanted to pay off 30% of the debt, that's what they have financial analysts and CFO for, to make those choices. That's not my choice to make. That's the company's choice to make. But all of it is balance sheet improvement. All of that is this overarching thing that I think retail would agree, that we call fundamentals improvement. And Wall Street is not going to just sit back and ignore that. You're going to see the price either maintain when they do dilution because they know that the balance sheet's about to get improved, or even if there's a temporary dip, you'll see it come back up once Wall Street knows how much they raised and what they did with the money.
Yeah, I like a point that you made, which is, we don't obviously know. We're just saying what if. And for me, even it's enough, and I said this on the video today, that if I was short, like often I try to game this out and be in their head. If I was a short and I knew he just even could, in theory, I could wake up in the morning and there might be a press release that they've paid off debt, or they bought a studio, or they merged, or they, I don't know, bought 10 new properties that are all profitable properties. Just the fact that he has that in his back pocket is already itself kind of, a little bit of a killer to the short thesis. Yep.
Steven, yep. I've been leaving you on the sidelines there. Do you have anything you want to add?
Yeah, I got some, just some fundamental
stuff. Jump in with your thoughts, and we'll take a couple questions, and then I want to get to retail's video.
Well, first I want to respond by, why would you short a company that could at any moment raise billions of dollars, right?
It's just that's why I think the price is going up, because they're asking themselves the same question: is this still a good play?
Right. And I got some box office notes if you guys want to hear them.
All right, what you got?
Can you guys hear me well first?
Yeah, but it's a little choppy again.
Okay, I'm gonna pause that then. Keep going.
Do you want to try and fix it?
Yeah.
All right. All right, let me see what questions we got. And let me see who's in the chat. Let's go back to Dan's question real quick while Steven is getting his mic fixed. Dan Mann, hopefully you're here, still here. Dan, shoot me wave a hand if you're still here. On the conversion, if it were to happen hypothetically, APE being at 280 and AMC at 620, would those APE automatically get the 100% gain from the conversion of APE? Retail, feel free to correct me if I'm wrong. I know you've read the document. And everybody here has read it. The way that I'm reading it is a one-to-one conversion. Every APE will become an AMC. Now, what I can't tell you, Dan, is how exactly the market, and I don't know who the market is, who makes these choices. I don't know what the price will be on the next day of everything. I don't know exactly. What is it going to be? In your example, that would be $9. Is every APE automatically going to be worth $9? Is it going to be some fudge factor in there for the fact that APE is twice the float of AMC? So maybe it's going to be $7, $7.20. I can't answer you exactly because we were all expecting AMC and Ape to break up at 50-50, and that didn't happen. It was more like 60-40. And I don't know who makes those, calculations. What are your thoughts on that, Retail?
Yeah, the more I hear you, the more I see that we think fairly similarly. So I guess a few things. One, for sure, the filing on the vote is super, super clear. It's a 1-to-1. And I'm hearing, so I know you're a little more of a YouTube guy, and I said I've been a little more of a Twitter guy. On Twitter Spaces, I've heard a few people just honestly making crud up, like making up math on scenarios and things. And if you just go to the filing, it's in there. Literally,
It says it in there like 20 different times,
yes,
1-for-1, not
yes,
not 1-for-10 Ape, and then you get 1-for-1. No, it's 1-for-1.
yes. Yeah, and they even give a scenario there where it like spells out if you have 100 of this and 100 of that, and then you end up with. So I would just encourage people to read that for themselves, not even necessarily to trust us. But so first off, yes, the 1-for-1 piece. There's something else you said that is exactly what I guess I was thinking the exact same as you in terms of it's hard to predict what the market itself will decide. We can come up with what we think is going to happen, but when we wake up on, say, March 15th, if the vote passes, you got that cool flashing light back there.
That's for the Grandpa sent me a super chat. Thank you, Grandpa.
Oh, that's funny. Oh, that's cool.
Glad
like
your
that.
lineman got the power restored. Love you both. Thank you, Grandpa. I love you too. He's not really my grandpa, guys. I've never met him. He's just a lineman that works up in the north, up in your area, stock retail.
Oh, nice. So just I was agreeing with you though on I think the market will ultimately decide. So anybody who says they know for sure, I don't think they do. But I've started to play around with. I even kind of made myself a little local spreadsheet. Maybe I'll share it at some point. I guess a couple things that I'm just thinking about. One is market cap. So maybe your audience knows there's like 929 million Ape out there right now, and there's 517 basically AMC. And so if you look at the market cap of each, that's AMC's total market cap right now. Like Ape is, AMC equities. So if you add those two market caps, then maybe you get to a weighted average price. That might be one way you think about it. The other that I'm wondering is exactly what you said. Is it just the price of AMC as we get closer and closer to the vote that maybe, we wake up the next day and that's the price? I'm honestly not sure which, and I go back and forth myself a little bit.
Yeah, I mean, there's some things, guys. We're just investors like you. I've never worked on Wall Street. I'm sure Retail hasn't also. It's a burning question. I would love to know exactly how do they calculate that, but it's a little bit of a gray area that we're going to wake up if the yes votes win the next day or the day everything plops in, and we'll see what the price is. But all of your apes, 1-for-1, will become AMC, and then everything will be divided by 10.
Yeah, exactly. Share count, I can tell you for sure, but then price, there's a lot of market factors in that. Oh, and I did want to say one thing though. So obviously then, as an investor, there's two things I'm thinking about, and I'm sure many of you are, which is one is this thing, the arbitrage play, right? So and that's why I'm sure the question was, do I buy Ape because it should go up to meet AMC? And certainly that's a logical question, and that's one thing you'd have to think about. But then the flip side for me, and why I'm not just like dumping AMC into Ape. Well, first of all, part of that is very personal. I'm here for the movement, not just investing. And I respect if some people are just here for the investment. I understand that. So for me, I don't want to sell my AMC. That just gets real personal. That's not necessarily an investment decision. But then the flip side of that is, you brought up cost to borrow. And so AMC is just really, really obviously getting pretty squeezy. And I'm not, I'm not trying to hype or make any promises. But for me, it's like, I don't know. There's a little bit of FOMO almost for myself even. I don't want to sell out of my AMC and then wake up and watch it squeeze either. So there's reasons to buy both, I think, is what I'm saying in my opinion.
Yeah, I think I'm just, from the people that I talk to in my Discord, as far as I know, everybody is holding both, and some are adding both.
Yes, I have both for sure.
I have not made any like sell my Ape and buy AMC, sell my AMC and buy Ape. I'm not doing any of that. I have everything that I've had before the split, and since August I've only been adding Ape, and I've been beating that drum that one day, I thought that day would be years off, but one day when a vote got on the table, the cheaper you can buy ape, the happier you're
Yep.
going to be.
Yep.
Someone asked me in the comments today, Tony, why are you so negative on ape? You said it was going to a quarter. If I said it was going to a quarter, that was a prayer. I would have loved to buy it at a quarter, guys, because the cheaper it got, the more I bought. And
Same.
I'm in the green on every ape that I've bought since August. And I'm just ecstatic over the moon that this vote is on the table and the arbitrage play. We got it early. I've been telling you guys since the beginning of August that this was going to happen. We just got it way sooner than I thought. Well, and congratulations to all of you that have been buying ape cheap. I know many of you have. And I mean, it does kind of suck for the ape that we held. Right. That is still in the red, but part of the deal, the arbitrage idea of buying it cheaper and cheaper, was to make up some of that money, or to dollar cost average, as you would, if you will, for exactly this moment.
Yeah, and I had many of the same responses. I was like, just fundamentally knew that they really should match in price. In fact, I don't know if this is something else you may have talked about here, that it's not actually that common that preferred shares have voting rights. So the fact that these were preferred shares and had voting rights, they should have had a kind of a value from that, an economic value that represented AMC.
I think someone asked me, why did they do that? I think they did it just to make sure it would be easy to convert.
Mm-hmm. Well, and so, for me, that was why anytime, right from the beginning. And so it meant that I was buying too high, frankly, because as soon as ape started dipping under AMC, I just thought it would happen a lot faster, that, the market will figure this out and the two will come back together. And that just took a lot longer than I thought. But same, just a lot of times, I think I kind of went 2-to-1 and 3-to-1 on most of my buys whenever I had some loose change of just throwing it at ape and AMC.
The lower it got, I started 2xing my previous purchase.
Yeah.
Nick says, how do you think people's votes will change if AMC and ape will have a huge run up prior to the vote? Okay, real talk here. The absolute best scenario for all of us is a squeeze before the vote. I think we can all agree on that, right? And I hope that happens. And I think the setup right now, we're on the precipice. I don't want to be too rah-rah hopium, but, and I don't know what, I look at the entire market. I'm not just looking at one chart. So I got to factor in market risk and global war risk and a bunch of other things that I always factor into my mental model. But if I just consider AMC and what the market did today, we are on the precipice. You saw a lot of squeezy stuff going on many plays today, even people buying Best Buy when it's about to file Chapter 11. There's just an irrational amount of buying. And I love to see that because that will help us. I would love to see a squeeze before the vote. That takes all the angst and the worry about verse splits and all of that out of the equation. Pray to the gods, both old and new, that we get a squeeze before the vote. That would be ideal, Nick. How will that change people's votes? Will probably be mostly out of the play. You won't have to worry about it if we get a squeeze.
You talk about arbitrage. What if AMC has squeezed and then you hold on to your ape and now that goes over and goes way the heck up?
That was the second question that I got today. What happens if we start getting a squeeze? Like, which one's going to squeeze, AMC or ape? If you ask my opinion, and I want to hear from you, retail also, the one that's most likely to squeeze right now, obviously, is AMC because high cost to borrow and high short interest. Ape has almost no short interest. I don't care about the 43 million FTDs. That was 3 months ago. They're closed out. Ape is irrelevant to me, my opinion. I know a lot of people got a lot riding on carrying that theory that 43 million FTDs were never covered. I don't personally care about that. I think they were covered. That was market inefficiency for the first 3 days, and they got covered. That's neither here nor there. AMC is the most likely to squeeze, but ape it's hitched along for the ride because ape is a derivative of AMC. They're economically equivalent. So if AMC moves up, I expect ape will move up with it, but maybe not to the same level. That's my opinion, my theory. What do you think, retail?
Yeah, I think here I'm going to admit almost like two trains of thought in my own head. One is, as you do know, I can tell already, when Ape was created, it carried over all the shorts from AMC. So it's like a copy paste, like whatever was short. If you were short AMC, you were short Ape when it first was created. And, I think it feels fairly clear we've never had a covering event on Ape. Like we've never seen any kind of significant upward price pressure on Ape. And yet, if you look at Ortex, the short interest is far lower on Ape. And so there's something that doesn't add up for me. And now I'm getting into a little bit of like, I don't know, conspiracy theory and all, but that's
I'll tell you a logical theory why.
Yeah, go ahead.
Institutions don't care about Ape.
Well, but so I'm just saying, how did they wipe the shorts off the books, right? Like, where did those go? We should have seen a covering event pushing the price up.
And there was so much negative selling pressure they could easily cover over a period of months. And
it's possible. And I mean, there was all the dilution that you've talked about and all of that.
And yeah, that too, the dilution too. But big institutions, I think, sold Ape, like Vanguard and BlackRock. They don't need to hold Ape. Vanguard and BlackRock, the majority of their shares are in ETFs that they carry for matching indexes, and they don't need that. They don't need that for Ape. So I think they sold off right away, and then the Meet Kevins and Matt Cords of the world added to that, and you just saw Ape get obliterated, and so it was an easy cover without driving up the price.
That's certainly part of the story for sure. I think, I guess one thing that would sort of agree with you logically is there are a lot of those institutions who, and some of them at least, and some funds who they don't want to hold preferred shares. So that certainly had to be part of it. But I guess I'll just be honest. There's a part of me that still believes there's something going on there that we missed. That not that we missed. That was a little harder to track. But that's speculation. So if I remove the speculation, then I understand what you're saying for sure. I guess the other thing that I'm still researching, and it gets out of my area of expertise, is this whole notion of a new QSIP for both. It is both, by the way, if you look in the filing. Some people have said AMC is not getting a new QSIP. Both are getting a new QSIP. And so then there's some...
I thought Ape was going to be deleted, so there won't be a new QSIP for it. But AMC, when there's a reverse split, there's always a new QSIP.
Right. So if Ape... Well, maybe in some ways we're saying the same thing. They'll both roll up under the new QSIP. So Ape gets deleted, to your point, yes, disappears. And then AMC reverse splits and into a new QSIP. Now they're all together.
What are your thoughts on the QSIP? Because I've watched many reverse splits, and I do not believe the QSIP change matters one bit.
That's a really good point. If there were heavily shorted stocks that reverse split, it'd be interesting to look at the history of that. So I get where you're going on that. And that's what I was going to say, that I haven't done enough DD to really have a point of view on that. I've seen that line of thinking that, they're going to have to cover. And then this whole other thing about, people like to talk about Citadel's 65 billion, purchased, not or sold, not purchased. And, is that basically the home of sort of naked shorts? And would that suddenly get
That's
bigger?
the home of shorts, all their shorts.
Yeah, I sort of stay away from all that, to be honest, because one, I don't fully understand it yet. And two, I don't want to get into hopium either. I heard you say that. I'm similar to you on that.
I respect that. I have many good friends, content creators that I consider friends, even though I've never met them. I respect their contribution to this movement, that are very much strong believers that the QSIP change matters. And I respect any of your guys' opinions, viewers or other content creators that think that matters. I'm just telling you, in my opinion, my experience watching many, many plays over the years, that it doesn't, I've never seen it really make a difference. And everyone likes to say, but Cosmos, Cosmos was a rushed overnight reverse split, and there was market inefficiencies and brokers weren't ready. And it was the trade of the year because of that inefficiency. But I think it had nothing specifically to do with the QSIP. It was transfer agent and broker inefficiency. And then some brokers weren't even showing the new price, and people were selling it thinking they were making a killing, or selling it, thinking that they were losing, or whatever the reason was. And those trades went to the tape, and people that were on top of it, I had not had my coffee, so I was not on top of it, but I was watching it. It went all of a sudden from 60 cents to 20 something dollars in a couple hours, because half the people couldn't trade. I think that had nothing to do with the QSIP or shorts covering. It was just the FOMO took over, and the amount of shares available was cut in half because people were locked out. And that was very unfortunate for those people.
Hey, Tony, do I sound better?
You do, my friend. Steven,
I
you
do.
sound
It's
better.
good.
Yep. Tell us some box
It's a
office
miracle.
numbers.
Okay, so I just want to say a few things before my internet craps out.
All right.
Okay, so the 2022 box office was 7.4 billion. I made a prediction that I believe we'll finish the year 2023 with a $9 billion box office. So right now, the haters pretty much of the box office are saying we don't have any big blockbusters for 2023, like Top Gun, right? Like a one-hit wonder movie that will earn over 350 million. But the thing is, we have a larger quantity of movies. There are 8 films that are expected to earn over 250 million. And I expect usually 1 or 2 films to double that expectation. Those are Hunger Games, Indiana Jones 5, The Marvels, Guardians of the Galaxy 3, Super Mario Brothers, and John Wick 4. There's a very good chance that we see a couple of films top 500 million domestically. And if I had to put my bet on 2 of those, I'd also include Spider-Man Across the Spideyverse and Mission Impossible. The return of Tom Cruise is going to generate a ton of hype. So that would mark a 22% increase in total box office from last year. It's still short of the pre-pandemic levels, of course, because our best year was 2018, which brought in 11.9 billion in North America. But the thing is we need to cross what I call the psychologically important $10 billion level.
Yep.
And I believe that's within reach of end of 2024. But that will also be complemented by Avatar 3, the multi-billion-dollar movie set to release in December of that year. And also Joker 2, its previous predecessor, was the first ever billion-dollar rated R film. So the hype will be insane for Joker 2, and that will be complemented by Batman 2, which was confirmed with Robert Pattinson earlier this week. So with all of this being said, this is my speculation. I believe by 2025, this company could surpass the pre-pandemic 2018 numbers.
And I know people listening right now, the vast majority of you do not want to be in this ticker in 2024 or 2025. But I know Steven is like me, and he games out all the scenarios. Like, what if we are stuck in this play? When do we get out of it? I don't know about Mr. Retail if he games it out that far, but 2023, this company, unless like retail popcorn brings in $2 billion in net in gross profits, 2023 is not going to be a profitable year for AMC. So if you're wondering why the big rush to raise money, because this company is burning cash, and they will, by all the numbers we have and all the experts, we will continue to burn at least a couple $100 million every quarter this year. And we don't have that much money to make it. There's not enough in the bank.
Well, so it's interesting, Steven. It sounds like we should talk sometime because my background in business is forecasting.
Nice.
And without maybe outing myself too much on what I was doing, I'll just say, so I have I'm even looking at my spreadsheet here right now. I've got like every single movie for 23 and 24 that I've also done my own forecast of. A lot. You and I have some pretty similar takes, and then maybe a couple slightly different takes on some stuff, which, that's normal. But then I've also, Tony and Steven got I think I've got 15 quarters worth of every line from every income statement and balance sheet here that I dump them in my spreadsheet every time. And so then I kind of learned over time, I could look at I can use history to basically forecast the future. That's kind of what I'm trained to do. And I'll actually say, because of the movies this year, that I believe Q3 is almost let me choose my words carefully. I believe there's a very good chance at actually a profitable quarter, Q3, based on the timing of which movies are out and how big they'll be. Now, that's a forecast, right? So I say on some of my videos, there's an idea in forecasting that if you have a forecast, it's wrong. So please, nobody, quote me on any of this, but I'm just telling you, I believe Q3 maybe even profitable, and then Q2 actually kind of has a shot at it. So I'm with you, Tony, that on the year, it's not necessarily full profits for the year. At one point, I had believed that. there's a few movies that disappeared out of the year. Like at one point, there was even supposed to be a Star Wars movie this year, and that got bumped out. But mainly, I'm just saying I agree with Steven that, man, there's some really big movies coming this year. Some of the same ones you listed, and maybe a few others that I'm looking at. It's exciting.
Retail. I
Sorry.
want to. I want to enter. Are you done with your thought?
Well,
I got
just
a question.
one real quick. Just that, and we could. I don't know. I could send you something sometime, or maybe I'll do a video that. In my opinion, because of earlier, I was talking about how some of the underlying fundamentals are actually different than pre-COVID. That actually the AMC does not need the total box office to get back to pre-COVID levels to get to profitability, because some of the margins and some of the expense items are actually better now than then.
Concessions are higher and ticket prices are higher.
Yeah, and then rent is
the
lower.
revenues are just going up. I mean, Adam Aaron said on the earnings call that he expected 20% increase in revenue for 2023.
I hear you. I hear you. I just err on the more caution conservative side. So.
Yes, I don't want to spread hopium, but I think the key that I've made the case in the past is, and I know, Tony, you've got some training in economics, so this will probably ring for you, that when you have a fixed cost model, so like their biggest expenses are, things like their leases, and a couple other things that are fixed costs.
Employee salaries.
Well, and so if inflation is driving ticket prices up and concession prices up for us as a consumer, we're actually paying them more. So their revenue line is going up while a lot of their cost lines are actually fixed. That you move into profits. They actually benefit from inflation.
All right, let's talk about DC's question. I've already answered this so many times.
Oh, man.
So many times. And I've answered it again in the Discord today. I'm going to let you take a first shot at it, retail. If the price goes up 10x, who's going to pay that?
Oh,
man. $60 a share. Who would ever pay $60 a share?
Well, I would ask, was anybody buying Amazon when it was in the thousands? Was anybody buying Tesla?
But let's go more simple than that. Let's
go.
Sure. Who's gonna buy AMC at $60 a share?
I mean, I am.
But why? But why? I'm gonna press you, and if you can't answer, I'm gonna jump in.
Why am I? I mean, it's the same as today.
Boom! $60.
There you go.
$60 in March is the same as what today?
6.
Guys, were you buying at 6? Were you buying at 5? Were you buying at $3.90?
Yeah,
when the float gets reduced.
Sorry, I'm just seeing your comments. The person who bought at 52. Me too, buddy. So
look, guys,
I've definitely got some buys where I'm red.
I bought at 38 in 2021, but that is neither here nor there. Look, you got to get out of your retail mindset, because Wall Street is a lot smarter than you, and they're not looking at price, guys.
Nope.
They're looking at price times market share. Price times float. Price times float.
Yep.
Well, all right.
Or market cap, as I like to say. So you might think $50 is a lot. You might think $30 is a lot, but it's the same fucking thing as $3 today.
Well, there's a concept that at my company that we cared about. It's price to value. And so the key is today for $6, that's your price. You're getting a certain amount of the company, and that's your value. And so to your point, in the future, sure, your price went 10x, but so did the value. And so there's really the relationship between the price and the value has not changed.
I need you guys to grow as investors, to be successful for your future, and stop looking at the price. The same argument that makes me crazy when people say, well, Regal's more expensive than AMC. All right, well, did you look at the float? Did you look at the market cap? Price is fucking irrelevant when you're comparing stocks or when you're comparing something before or after a split, because you're leaving out half the equation, which is the float. You got to, I want to reach through and choke you, but I'll be nice and just ask you to do the math. What is 100 shares times $5? Or what is 10 shares times $50? Is it the same thing? Wall Street is smart enough to know it's the same thing. We need to all collectively be smart enough to realize, even though you think the price is higher, it's the same thing. Well, no one can afford $50. Okay, so you're telling me you're buying $5 a day? You're buying $5 a week of AMC, or are you buying 100 shares at $500? If you're buying 100 shares at $5 for $500, it's the same thing to buy 10 shares at 50. You're still spending 500. Yes, you're getting less shares, but you're getting the same ownership percentage of the company. As retail said, the value proposition of that dollar amount that you spent. Quit getting fixated on the price. That is what's a nice way to say it, Stephen?
Sorry, say it again, Tony.
What is a nice way to say someone who looks at the price and neglects the value?
Chalk eater.
I said a nice way to say it.
Oh.
It's an illogical way to look at it, guys. You're not looking at it like someone on Wall Street would. I can promise you they're not looking at it like that. That's why we lose, because we don't know how to do math. You got to be better than that. You got to stop listening to these fucking shills and the people who don't understand math are putting out videos saying who's going to buy it at 50. The same fucking people that bought it at 5.
Well, it's mental priming. Like, you and I were talking about before you started this stream, that I do believe there are genuinely, nefarious players who want to get us thinking about distractions. And so if they can convince you to think about something that gets you,
thank you,
making a bad decision, then they're actually getting paid to do that.
It's a fucking straw man.
Yeah.
They're distracting you by getting you to focus on the price without telling you the second half of the damn argument, the second half of the equation. And you're falling for it. Stop listening to these fucking shills. They are trolling you with purposeful misinformation without explaining you the entire thing. God damn, fucking the misinformation in this stock market right now is just astonishing to me. And you guys are falling for it. I mean, for all I know, this guy DC is part of the movement to push the misinformation. I'm going to give him the benefit of the doubt that he's not. Maybe he's just confused. But if you were buying it at $3.90, that's the same as buying it at $39. If you're buying it at $5, it's the same as $50. If you bought it at $30, that's the same as $300. How do we get it to 300? Guys, it takes the same amount of dollars to move the same amount of shares from, what are we at today? 6 to 30 or 70 as from 60 to 700. It's the same amount of dollars when you factor in the float.
Yep. At the end of the day, it's
a piece of paper and a pencil. Do the math yourself.
I mean, you're increasing the confidence of institutional investors by raising the price. They're more likely to buy it if it's at a higher price. Less volatility, too.
I want you guys to become smarter investors and not fall for this bullshit. Price is irrelevant. What's Berkshire Hathaway cost right now? What's Amazon cost?
$400,000? Yeah.
I mean, people buy those stocks. Wall Street buys those stocks because they're not worried about the price. They're looking at the value. They're looking at the number of shares. Berkshire is never split. That's why it's expensive, but people buy it. People, not me, can't afford 400,000 shares, but Wall Street does. Institutions do. They're not going to bat. They're not going to bat one single fucking eyelash for $50 a share, knowing that the free float was reduced by 10x, because they have financial intelligence, and retail, unfortunately, does not. I get it. You guys were not trained in finance. You weren't trained on Wall Street, but so I'm Tony, trying to help you get there.
It's interesting you brought up Burke, because you can go find, or your followers can find, I think this is also out on YouTube. Warren Buffett, kind of a long time ago, was presenting at a shareholders meeting and talked about this concept of dilution. And just, if I simply said, if you gave me $10 and I turned it into $12, I think you'd be fairly happy with me as a business leader. And so this idea that there's something called value creation, right? So if a leader like him goes out and he dilutes, he sells shares, but if he uses those shares to actually create more money than the dilution itself, then everybody's stock actually goes up. And
we've talked about that many times, the good dilution, but I don't want to segue into that, because
fair. We're kind of
that didn't work out. It didn't work out so well in Ape. Yeah,
people don't love that argument sometimes. Maybe just a time check. if you do want to touch the video, we don't need to. I'm not here to like get clicks. I'm just here because I like that you're a little bit rational and I'm a little bit rational, so I agreed to come here and talk. But if you were wanting me to go through that, maybe we should do that soon, because I probably have to leave in the next 20-30 minutes.
All right. I'm gonna answer Cracker Mac's question real quick. He said
Sure.
everyone knows that the price being 10x is the same if the float is reduced 10x, but we were hoping for a squeeze with their current share count. Again, it's the same math, guys. It's the same math to get from $6.08 to $72 as it is to get from $60 to $720.
Yep.
You might not get that. That might not make emotional sense, but it is mathematical sense. If you think it's easy to get to 72 right now, it's not without a catalyst. But if your float is reduced 10 times and you're at $60, it's the same damn math to get from 60 to 700 as 6 to 70. That might be mind-blowing for some of you to hear. You need to take a pencil and paper and write it out.
Yep.
Do it 10 times if you have to.
Well,
A reverse split does not change anything except it's a fugazi.
Yep.
I like to say x equals x. X does not equal 0.1x.
Exactly.
Yeah.
And Tony, also, I mean, I don't know when Adam Aaron would do it, but at any moment he could just do a forward split later down the road if he needs retail to come back in. You know, it's obvious he needs institutional support. That's why he's doing the reverse split.
Someone asked if I could do it on a whiteboard. I can draw it out for you, but I'm not going to do it on this video. But maybe, I mean, if we need to, I can do a video where I show you that. All right, let's talk. Let me put up Retail's video, and I'm not going to turn on the audio. I'm going to let him talk to it, but I'm going to put up some of the screenshots of it. And I put a link to this video in the video description, so you guys go give him a sub. And hopefully he doesn't turn against me later like everybody else did.
Sorry, man.
Tony Denaro took an acting lesson. He shouldn't be covering this stock. He's obviously paid. Oh, Lord. But I'm going to give you the benefit. Going to give you the benefit of the doubt and shout out your channel.
Well, hopefully, I mean, first of all, thank you. That's very kind. But, you know, I keep telling people on YouTube, not you, Tony, but just in general who are finding me, like, you can go check 2 years of receipts on me on Twitter. So I would hope 2 years is enough to kind of demonstrate kind of who I am and what I'm about. So if anybody's got questions, and some old Reddits as well. Do you mind? Can we do that other, maybe the other video?
I'd like you to go through this one quickly first.
Yeah, no problem. Well, we're hitting a lot of the points sounds like you've been hitting as well. One was just, in the video, I was kind of making the point that, and any of you who've been around for a minute know, like, we see these waves of bots and shills and whatever showing up. And when I've never
in 18 months seen more than I have in the last 10 days.
Yeah.
People I've never heard of coming in talking shit to me.
And we've got the famous moments in history, I guess I'll call it, infamous maybe. So like maybe some people will remember one day we saw dozens or maybe even hundreds of people saying, Jesus told me to sell at 50. That was like back in 2021. And
or the meme stock traders are loving silver right now. Remember that?
Yes, yes. Silver was a big one. And then the worst, kind of the, I don't know, grossest one was, if you guys remember the Las Vegas shooting, the big shooting, and all of a sudden a whole bunch of names who had actually been killed in that event had Twitter accounts and were posting on Twitter anti-AMC stuff. And some smart apes kind of figured out, like, wait, a bunch of these names are from that list. So, but the point is, we've seen over and over, like, if I see, say, 20 accounts or even just 10 accounts, and sometimes it's a lot more, who start all showing up at the same time. I told you I've been in this 2 years on Twitter, so I kind of know who people are. You start seeing some of the same names. You start kind of just, I don't know, rubbing elbows with everybody. And all of a sudden there's like 20 accounts I've never seen in my life, and they're all saying the exact same thing at the same time. And it's always negative. Then you kind of like, okay, this is not normal people just arguing. This is a concerted effort. And so what I was trying to be careful on the video though too, and I go through on these and I say, listen, if these are your arguments and you're an actual ape, like 100% respect, I get that people can disagree. What I'm talking about is when I see 20, 30, 40, 50 accounts showing up and they're saying the exact same things as each other. And so these were the arguments I saw that, coming up since the vote was announced. And so the one was, this concept of, well, we're going to reverse split and then they're just going to drive it back into the ground and now I've lost 90% of my value. And I think, Tony, your video on the history of reverse splits, that was why I was going to do that DD and why I'm kind of saying, just kudos to you. Thank you for doing that. So that I think honestly is the answer to that. But even more than that, I was making the case that the fact that AMC would have access to capital starts to break the short thesis. And then what's more, I'm just asking myself, like, does the no vote actually fix this issue? If you're saying they can short it into the ground, well, why can't they just short it into the ground now? What's different?
Exactly.
So, yeah.
To
so
short it from $50 to $5 is saying like they could short it right now from 5 to 50 cents.
Right. So in that case, your argument is the shorts are infinitely powerful. And then what does yes or no matter? Like that's
why would you be in the stock market anyways if you think
Yes.
they could do that?
Yeah, exactly. So that to me is not I'm just saying, is this a logical argument that convinces me that a no vote makes sense? And on that one, I'm saying no, because it doesn't solve anything. So we can go to the next one if you want.
All right. I hope you guys heard that. Like I've said the same thing, and this is why I love this video that retail did so much. Like if you think, I'm not saying it won't get some price pressure if there's a dilution announcement. It probably will. Probably
but
will.
That's about dilution. That's not about the reverse split.
And that's not about being shorted either. That is normal market reaction to a dilution announcement. So I want you guys, if you're listening to my channel, to be mentally prepared if you're still holding past the vote, and at some point after that a dilution gets announced, normal market reaction is the price could tend to go down. That doesn't mean it's going to be manipulated, but if you start selling into that, they will take advantage of it. But for them to push it from 50 down to 5 is the same as saying they could push it right now to 50 cents.
Wow. Stock retail, you're kind of a really smart guy. I'm impressed.
All right. Well, next argument that we see a lot.
Let's see the next one. We lose 90. Oh my God, that's everywhere. We lose 90%.
Right. So this one, I don't know how much we need to cover because in many ways it's just the same thing we just said from a little bit of a different angle. But the key was here that I was walking through in the video is, and I think, Tony, you kind of hit it. They're getting you focused on quantity instead of focused on value. And I was just giving the example. I've got 3 kids. And honestly, I have wonderful kids. They didn't do this to each other, but just the idea of my oldest is 8 years older than the youngest. And had he gone to the youngest and said, hey, you have this yucky, dirty quarter. It's got gook on it. It's old. I'll trade you these 5 shiny pennies. If you're focused on quantity, and because I've seen some people try to say, well, I worked hard at building up my share count. In my opinion, I think what you've worked hard at is building up a good portfolio, and you would love to have a good portfolio you can retire on or travel on or whatever it is you want to do. And Tony's already said that's kind of unrelated to share count. It's related to value. And so I just want to see people not get into a place where you would accidentally trade 5 pennies for a quarter. And so that was my point there. And then actually, funny enough, you brought up Burke a little bit ago. I was giving an example. Would you rather have 1 share of Berkshire Hathaway or 1 million shares of Shiba Coin? Well, 1 million Shiba Coin it's next to nothing. Go look at the price. And I was even demonstrating, like, if Berkshire went up 1%, I think as of when I made this video, that would have been like a $4,700 gain. And for that same gain, I think you needed, if I gave you 1 million Shiba Coin, you needed like a 400% gain to get $4,700. And so the idea of that quantity somehow, opens you up to getting more gain. I just hope that people can kind of see how that's false. It's the value.
I think the power of this second argument from the Shield team is predicated on the first argument.
Yes,
and
they're totally related.
I understand that. Like, I get it. I understand your fear. If you're worried they're going to short it more and your share count is reduced by 10, I get it. I have the same concern. Like, I'm human just like you are. And I think that if there is a dilution announced or people just give up on this play because they're mad, the price will go down. And the fact that we have less shares will bring down the price. But that's the same as like if you gave up today and everybody started selling at $6, the value of my total position is going to go down.
Yeah.
So you're not going to lose 90% of the value. And I even heard someone say today, I understand, Tony, that you keep on talking about the value of my position and you don't want me to worry about the number of shares, but I want to worry about it. Then I would say then you're being a typical retail investor, and you need to grow as an investor and understand that the value of your position is also dependent on the float, and that your overall position value is not changed after a reverse split. That's just growing as an investor and not being someone that can be manipulated by psychology out there on Twitter and YouTube.
Yeah, exactly.
You're going to lose 90% of your shares. Absolutely. Not 90% of your value. And if you don't like that argument, I don't really have anything else to say to you. You're not someone who thinks in a logical way like I do. If you want to just stay on the emotion train, then this is not the channel for you. All right, let's move on to the next
one. Yeah, let's see. Oh, you already covered this tonight. So this is just saying, hey, 5 to 500 is the exact same as 50 to 5,000. Like, there's no difference. So I'm not even gonna. You already covered it, Tony, and I thought you did a good job.
All right. A gain is a gain, whether it's $5K or $500.
In this case, I mean, I'm demonstrating basically 1,000% gain is 5 to 500, and
that is predicated on
5,000.
That argument. This shill argument they're using is predicated on the fear that you're seeing that they're pushing. Who would pay $5,000? Who would pay 500? Guys, Wall Street or someone who's short, they have the same 10x leverage by the float being less and the price being higher. Their obligation is exactly the same. They're not going to get out of this just because the price is higher. It's the exact same damn thing. If you think today it can run from 6 to 70, that's the exact same as running from 60 to 700.
Tony, have you heard of that recent theory going around that says, are the shorts going to be able to buy APE on the conversion to get out of their AMC short?
Yes, I've heard that. We can talk about that after this slide.
Yeah. Don't let me forget.
All right, retail. APE didn't work.
Oh, yeah. Well, this one, again, where I was talking about, what I was talking about on this was just people using these things as an argument that I should vote no. And so I'm just asking, does no solve this thing? And this one is real easy because basically if someone's voting no, you're keeping APE. So if you're looking at me and saying, hey, APE didn't work, therefore I want to keep APE. Like, okay, I don't even have to explain why that argument doesn't work.
APE didn't work. Why should we do a reverse split? I want to keep APE because it didn't work.
Yeah, exactly. So it's like, all right, next argument.
Like, come on, guys, we got to be better than that.
But and the point, by the way, just so that everyone, because your audience may not know me, the reason, my heart is to educate and inform and lift up, and that is why I'm doing this. I'm trying to say, hey, I think these are not good. You've used the word logical, Tony. Like, I'm a little bit wired like you on that. I think, like, I would love to see people use logic and reason and not fall for what I kind of view as distraction arguments. Yep, and then dilution. So in several vote videos, and that's why I was saying maybe we can even look at the other one if we want. But I believe that I have actually solidly proved with math, frankly, that a no vote actually means more dilution, and a yes vote means actually less dilution. So if you're concerned about dilution, you actually vote yes.
Yeah, the rough back of the envelope numbers that I use, and I probably should put this on paper to make it make more sense. But let's just say I'm going to throw out a really low number, like after the reverse split. Let's say it dropped to $30, and he diluted or let's just say it started at 50 or 60, and he authorized a dilution event to sell 100 million shares, and the average price he got was $30. What is that? 100 million times 30, $3 billion, right?
Yep.
All right. 100 million shares times the average price of 30 is $3 billion that he would raise. What is 100 million shares if we were pre-split, like right now? What's that equivalent to?
Well, or even
it's equivalent
you
to 1 billion, right? Right.
Well, the issue, what I even would argue is, if there's a no vote, then all this arbitrage.
I'm going to go there.
Yeah.
I
Okay.
think.
Then follow it through. Go ahead.
100 million AMC at $30 is equivalent to selling 1 billion ape right now. But what's the price that we were getting for ape?
Yeah.
Exactly. 60 cents.
66.
So you could sell 2 billion ape at 60 cents and raise $1.2 billion. That is twice the dilution of 100 million AMC at $30 for half the net result.
And you're giving away the voting rights.
And you're giving away 2 billion votes for $1.2 billion, or 100 million AMC times $30 average. And I think that's conservative. Gives you $3 billion for half the dilution. Guys, how can you sit there and tell me that voting no and saying just dilute us more ape? I want that 2 billion more shares out there for $1.2 billion.
The MOAS, Tony.
That sounds a lot better to me than 1 billion dilution for $3 billion. Like,
yeah.
If you think logically, financially, unemotionally, there's no way that a no vote makes sense in terms of dilution.
So and I think what it is, and I actually started throwing together a couple slides on this. I might do sometime. Sometimes I play chess with my 9-year-old, and he gets real excited about a couple moves he's thinking about, and so cool that he's 9 and he's interested and he's learning. But what happens is he gets blindsided into like just thinking about the moves he was ready to pull off, and he forgets that I'm going to have counter moves. And so then it doesn't really work out for him because he doesn't think about what I'm going to do. And I think the people who are saying they want to vote no, they're not thinking about the fact that exactly everything you just described. If I'm voting no because I think somehow it's better for the squeeze, but then I don't think about how, oh, well, now they're just going to use ape for dilution, and that's actually far worse for the squeeze.
Yep. It's far worse for so much more than that, too. I mean, the company's going to suffer long term. The AMC shareholders will suffer long term.
The company will barely limp through 2023, raising cash for pennies on the dollar, giving away votes to institutions who have the money to buy it on the cheap. And if no squeeze happens, you have hamstrung them.
Yep.
You kneecapped them. You cut off their arm.
If I was Adam Aaron, Tony, I would be on the phone calling every institution, telling them to vote yes. That owns AMC.
I mean, any financial way you look at it, it makes sense. Any emotional way you look at it, like that chart that retail did, if you're just playing off of emotions because Trey and Matt and Lou told you that there was going to be a MOAS yesterday, well, welcome to 2023, guys. It's time to get past these fucking clickbaiters and start thinking about finances, because that's the play you're still in. And if you don't like that, then you probably might want to consider leaving the play. If you don't believe in the company and the management, what is the SEC? What is Matt Kors? What is Trey? What has Lou done for you since 2021? Jack shit. Ooh. Just saying. You got to recognize the play you're in today. That's why we're talking about this stuff. And it's not pleasant for some of you. I get it. You hate me. I get it. It's okay. I'm a grown-ass man. I can take it. But I want to educate you. I want you to understand where you're at, or at least understand my viewpoint. You don't have to agree with it. But I don't look at investments based on emotion. And I don't use the word MOAS. I'm sorry. I'm in it for a good old-fashioned squeeze. And the best way I know, unless some catalyst happens, look, we got a bunch of them on the table right now, and I'm as excited as I've ever been. But if some catalyst doesn't pop this thing off, the next best way to make something happen, to get the shorts out of this play, is to get the company, what's the new phrase I'm using? A improved balance sheet.
Yep.
To get the
Tony,
target off our back.
I think the day that, like, near the shareholder vote of the 14th, I think he's going to drop the popcorn announcement.
I sure hope he drops something.
That's it. That's the time.
I hope he drops something, Steven, and I hope it's not a turd in the punch bowl.
Yeah. Wait, you don't think an NFT will get the MOA?
No. I hope it's not a coupon on Upstream. $10 coupon on Upstream. No, I want it to be meaningful. Like, yeah, the popcorn announcement would be good. Who knows what he has planned? Who knows? All right, retail, to honor your time. Where should I go on this slide?
Well, just real quick check with you. Like, my apologies. I haven't listened to your live stream before, so I don't want to bore the people to death either if we start going through too much dry stuff.
No. This is critical information to get out, and
okay.
I can be here all night.
Why don't we fly through it, I guess, and then why don't you go ahead?
I haven't slept since I discovered vampire blood, so don't worry about me.
Actually, in this video, I call shorts vampires, so that's funny you brought up vampires. Anyway, what I was trying to do, so this was ultimately tied to the vote, and in this I kind of give the math of all the shares on both a no and a yes vote as well. But what I was trying to do before I got there is sharing my view of, let me back up. Some people have accused me of, oh, you talk about fundamentals, I'm here for the squeeze. And I'm like, no, hang on. I'm actually here for the squeeze too. I just believe that fundamentals will help force the squeeze. Yep. And so I wanted to kind of help people see. This was actually from a Reddit I did clear back. I think this one's from December of 21. And there's another one that's sort of related from August of 21. Just more kind of, I don't know, receipts that have been around a while. And in that, I was explaining just all the different levers of the squeeze. So before we do this real quick, I don't know if some of you have seen like the kid's toy. It's like a bunch of gears, and like they turn. And if you take one gear out, like some of them stop turning. But if you get all the gears in place, they all kind of, the teeth come together and they turn each other. So I was trying to help people just see, here are, as I see it, all the gears of the squeeze itself. So it starts on the left there with that buy and hodl. You guys all know the story of that, but there's a key piece of that, in my opinion. And Tony, please feel free to interrupt as we go here. So if you think there's stuff we should highlight, you're welcome to jump in on me. We talk about apes save the company, and there's an element of that that's absolutely true. But I'll go back first, and I think it's important for myself. I kind of believe in humility. I came to this play sort of December 20, January 21. There's an entire year of COVID lockdowns that Adam had to keep this company afloat before apes ever came along. So it's absolutely true that we saved the company, and I'm going to even talk about how I see that. But it's also true that this leadership team had to guide the company through much darker times than before we even came, where the doors were literally not even open and there was zero revenue. And so I guess I just want to put it in sort of perspective when we say, we saved the company. Well, we both saved the company, in my opinion. But why did buy and hodl save it? Well, we've talked about this access to capital. Like, the company needed access to cash. And I just sort of liken that to, if you need to pay your electric bill, you've got to find a way somewhere, whether you've got a credit card, whether you've got cash in your savings or checking, or you've got to go beg a friend, but you've got to find cash somehow to pay that bill. And so when we were hodling and we didn't let the shorts drive the price into the ground, it gave him access to capital in terms of, Tony just talked through, do you want to sell a share at 67 cents or do you want to sell a share at 30 bucks? I think you can hear the difference between those. And so what happened at first when we were hodling is we were creating a situation where the shorts couldn't drive this into the ground. And then Adam was able to use that. And there's also, if you go back and look at the history, and you can find, public statements by Adam, media interviews, where it's not only getting access to cash, it's Tony talked balance sheet. I'm a big believer in that too. He was able to refinance some of the debt into friendlier terms and longer maturity dates. And actually, there were several banks who even said the reason they were willing to be friendly with him and refinance that debt was because part of it was the risk profile of AMC changed when they realized there was such a passionate retail following and that we had shown we would hold the stock. So even holding the stock also actually impacted his ability to refinance debt and kept them alive. So, all right, that's the input. That's where it all starts. And so, this shorted stock increases in value. And then if you're a short, what happens if you're one of the big shorts? There's something called mark-to-market losses. So if you're an institution, and if you go research like the 2008, 2009 crash, you will start to see something called mark-to-market losses. And the simple way I'd explain that is like, if you, let's say you're a bank that has a whole bunch of loans, and like maybe you got a loan on a $500,000 and you're holding, and that's an asset. The house is an asset that you've got this mortgage against. And the problem is, if that house is now only worth $300,000, that asset isn't, that sort of debt to the asset value isn't as friendly anymore. And so what happens is you have to mark an asset back to the market value. You actually change your books. You go into your books as a big institution, and you write down all these assets to what the market actually would bear. And so the big shorts, the institutions actually have to do that. So if they're holding a short position and the stock goes up, they have what's called mark-to-market losses. So maybe some of you on Twitter have seen, there's like, sometimes Apes used to follow a few people who would tweet about these mark-to-market losses. And all right, the stock went up by so much today. And that's going to matter because we're going to talk about margin calls. So if their assets get written down, it basically starts to get them out of balance. So that's that reduction in asset value. And so you see this, that means they've got an increased percent on margin. And I want to pause for a second just to, there's a whole Reddit I have in the video that you can go find.
What's your Reddit name?
It's also stock retail. I think there's an underscore, stock_retail.
Okay.
And there's one where I kind of describe all of this stuff. And because everybody talks about margin calls. So I thought, you know what, people need to understand. And if you don't know, guys, like, actually, I've been margin called, and it doesn't always have to be some huge event. I once got margin called for $1. I kid you not. And all of margin call, I want you to just think about like a teeter-totter or like a seesaw. And so if on one side you had a set of weights, those represent like basically an amount you borrowed from a broker. And on the other side, you have another set of weights, and that represents the value of your portfolio. And basically, if that gets out of weight, like say some of your stocks go down, so you're taking weight off of the one side, well, now the other side got too heavy. You've
Yep.
borrowed too much. And so that's a margin call. They just say, we need you to rebalance this teeter-totter. And you can do that one of two ways. You can put more cash in. So in that case, they were saying, you need to put $1 in to me. Or you can sell off some assets so that you haven't borrowed as much. And so
you could close that short.
Exactly. That's where we're going. So and this is why this mark-to-market losses matters, because it's basically changed the teeter-totter, and it makes them have, the portfolio side went down. So now the borrowed side is too heavy. So let's click a little bit more, would we? So it's okay if you even want to just show the whole slide. I don't care. So when their margin gets off, they basically have, they start having a problem with leverage, and you hear people talk about leverage and liquidity and all that. So basically, if your assets aren't high enough, then you can't have as much on the margin side. I'm sort of oversimplifying some of this, but just for our understanding. Yeah. And so one of the things that I told you, this Reddit post was clear back in 2021. So Apes were telling people, hey, tapering is coming. So you guys hear about this reverse repo market and all this stuff. So we knew that the economy was at some point going to melt down, and the Fed would be tapering. Well, that is like, I liken that in some ways to between tapering and raising interest rates. It's like taking oil out of a machine. The overall stock market is kind of like a machine that needs oil, and the oil is liquidity. And so that's what happened in 2008. You can see like things got tightened, and if you take oil out of a machine, it grinds to a halt. And so that's why I'm kind of calling it that. And so as the Fed is tapering, which basically is like that, less of their pumping, let's call it. They're not pumping anymore, at least as much. And then as interest rates are going up, cash just starts to get harder to come by. And when
this tightening up of liquidity that we keep on hearing about.
Yes, exactly. So let's click forward a little bit. So as that's happening and your teeter-totter got out of balance and it's harder to get cash, well, now you're something called over-leveraged, or you're kind of out of balance. And I mentioned that's where you get this margin call. So then we can kind of keep going. But what happens to a short if they get margin called? That's what you were just actually saying a minute ago, Tony. So if we click forward a little bit more, and you can leave it all up, it's fine. So if a short doesn't have cash, I mentioned if you get margin called, you don't have to sell positions. You can inject some cash so that you get back in balance. But let's say I've just kind of painted a scenario where cash is getting harder to come by and they're over leveraged and they can't go get more debt. They have to close their shorts. And so what is closing shorts? Well, that's you buy to cover. So that's upward pressure on the stock. But look at how this gets us right back into the loop. So even if they only had to close part of their position, now it makes the stock go up and you start that whole loop all over again. Now they've got more mark-to-market losses. And now the teeter-totter got out of balance again. And now, that is why there's a squeeze. That's literally what a squeeze is it feeds on itself and it keeps going and going. But there's one other piece. If we just click forward a little bit more, as long as we stay on this slide.
Yeah, I see Pantheon in the chat. If you want to come on, Pantheon, I sent you an invite on Discord.
Okay. Well, and so here's the thing. All of that, so it's absolutely true, buy and hodl was part of the squeeze. And that's what I just sort of was walking you through. And the reason I saved profitability till the end is, yeah, we ran in January 21 and we ran in June of 21. But, and by the way, some people even try to argue that was a gamma squeeze, not a short squeeze. I don't have a strong opinion on that myself. I'd have to do a lot more DD. But either way, even if you want to say that was a short squeeze, the real thing that injects, I don't know, nitrous oxide into this machine, or puts it on steroids, is profitability. If they turn profitable, in my opinion, all bets are off. This thing, you're going to get FOMO up the wazoo. You're going to get smart money jumping in.
If AMC turns profitable,
exactly. And so then that's going to start this loop just running like crazy. And so ultimately what I'm saying is, yes, buy and hodl is a big part of the squeeze and continues to be and always has been from day one. But also moving to profitability is what really, in my opinion, that's where the vampires comes in. I said it's kind of the nail in the coffin for the vampires. Like, it's
you might want to just consider adding profitability and or balance sheet improvement, because that also
absolutely. I would agree with that completely. One thing I've said in maybe another video is being debt-free would help a ton. But there are debt-free companies who are still burning cash. And at some point, that's still, it doesn't 100% solve the problem. It's huge. And I would actually completely agree with you, Tony. Well, I'm not going to name them, but you can be debt-free and still not be profitable. And that's still a problem at some point. And
at some point, when you're cash, it's a problem.
Yes, exactly. And so, and what's more, we know of
Highcroft Mining
companies that are, that have debt who are wildly profitable. Nike has debt, Target has debt, Amazon has debt, Apple has debt. So debt is not necessarily itself some terrible thing, as long as you're a profitable company.
I would agree with that. Like debt on the, I alluded to that a couple hours ago. Like there is such thing as good debt or other people's money, but it's when it's out of whack compared to your profitability or your assets. That's when you get into having a target on your back for shorts. And that's the position we're stuck in right now.
And I do completely agree with you that having a healthy balance sheet, I mean, it gives you access to much cheaper debt too. You can get far better rates. You look a lot more attractive, and certainly smart money, to your point, likes a healthy balance sheet. So I do agree with you.
All right. Anything else in this slide deck that we need to
look at? I mean, at the end, if anybody wants to go through it, it kind of covers the math on the vote and how many shares there will be, and just stuff. We'd be repeating ourselves, though. Essentially, if I boil it down to its most simple terms, it's a no vote is more dilution than a yes vote, in my opinion. And also a yes vote, because it gives him access to so much capital, fast forwards us towards that profitability thing that I said is really the, playing with fire at that point, or cooking with gas, I think I meant to say.
Yeah, I mean, I guess to sum all this up, I'm trying to be as empathetic as I can to everybody, and all of you that are worried about your shares being reduced and you're in it for a MOAS. I want to say that I hear you. I understand you. I get it, why you got in this play. I understand exactly what your hopes and dreams are. But and maybe there will be a MOAS. Maybe there will be a catalyst that kicks off this week and maybe there are billions of synthetics. But I focus my channel on things that I can tangibly prove. And And I try and focus people in my Discord and people that watch this channel on a couple of key tenets, which is I feel like the reason that so many people might be emotional about this is they violated one or more of these tenets, which is don't spend money that you can't afford to lose. Like if you're looking at your position being reduced by 90% and that scares you, then you probably put in too much into one play. Like I'm down 5 digits on my shares. Like I recouped it through selling options. So I'm okay, but I don't like seeing 5 digits down on my position, but I knew what I was getting into when I did it. And at the end of the day, being down that many dollars is not a big deal to me because I know I can make it up on other plays. It really doesn't matter to me. But if that matters to you, if this is your only play, I totally get it. Why you're emotional, why you're upset, why it is terrifying. But I want that to be a lesson. When people say don't spend more money than you're willing to lose, we fucking mean it. And even the pumpers, the clickbaiters, the Lou's, the Matts, the Trays of 2 years ago, they said that, but I don't think they really focused on it. So I'm going to keep on focusing on it on every live stream that I do. And I talk in my Discord when I'm doing swing trades or speculative plays. I'm not putting all of my money on shit stock XYBC because I think it's going to run today. I might put some days $100, some days $1,000. If I feel really good about it, I might put 50,000, but I scale my investment to my risk, my perceived risk, and my own feelings, my analysis of the play. Do not put more money in a play than you can afford to lose. I get it. You're already here. I'm just take some lessons out of this, no matter how it works out. Number 2 thing that I always talk about, look for a good entry. And if you miss the good entry, wait for a good entry. And if you missed it on this play, there'll be another one next week. Look, if you follow my channel or anyone that covers day trades, and there's plenty of YouTubers out there live streaming every day showing you plays where you can make a lot of money. If you missed an entry that was good on this play, if you bought in at 50, 60, 70 bucks, you bought in too late because the rah-rah boys were telling you. I was not live streaming at that point. You're not going to pin that on me. I started live streaming because those guys pissed me off, telling you to buy in at 60 or 70 bucks. That was bad advice, in my opinion. I will always tell you, and the guys in my Discord, the people with the badge in this chat will tell you that I tell people every fucking week, if you miss the entry, wait, there'll be another one. It's not a big deal. So don't put more money in a play than you can afford to. Try and parcel out your investments in different plays to a rational percentage of your portfolio. Get a good entry. You sleep a lot better at night. You're not going to be so emotional if it doesn't go the way you want. And number 3, before you buy something, know your exit price. You can have a rational exit price and a to the moon exit price. But if you bought in at 50 and it starts dropping and your exit price is like, no matter what, at 35, I'm out. I can't tolerate more than 20% loss. Then hit that sell button. There is a systemic problem in retail investors, and I see them even on YouTube, of not being willing or able to hit the sell button. And on every single play, if you don't know what your exit price is, you should not be buying. If it goes to the moon, fantastic. But if it starts going against you, you need to exit that play. And I'm not talking about AMC. I'm talking about every single trade that you do. There's a lot of trades that I take that don't work out, and I hit the sell button. Sometimes I'm lucky and I get out even. Sometimes I take 10, 15, 20% loss. Sometimes, if I have very strong conviction, I'll write it all the way down, like those fucking Royal Caribbean leaps that I had that I lost $8,000 on. I thought it'd come back. That's the breaks. I thought it would come back, and I had almost 2 years for them to recover, and they didn't. But that was my conviction, and I made that choice. So I don't blame Royal Caribbean. I don't blame the CEO. I blame me for having the wrong conviction. And bouncing off of that, I'm going to say, if you're investing in companies that you don't believe in the company or you don't believe in the CEO, then you shouldn't be investing in those companies unless you're a day trader, in which case it does not matter. If you're day trading or scalping, you don't need to know anything about that company. You don't need to believe in jack shit other than a chart in front of your face. But if you're going to hold something and you don't believe in that company or that CEO, then you should get out of that play. All right, enough preaching. Retail, what's your reaction to all that nonsense?
Yeah, I guess a couple thoughts off the cuff. One is I appreciate, that there are a lot of, join my Discord, buy my trade advice type of services out there who, look at this big win I got today, look at this big win I got that day. And, one of the things that you're never going to see some of them do is to talk about their losses, right? Because that's not generating followers and income. So I just appreciate your humility to talk about your losses. Like, that's what I was sitting here thinking about as you shared that. I was in Royal Caribbean at one point as well, another kind of COVID reopening play. For me, that's quite a while ago when I was in that. But anyway, I guess kudos to you for sharing. I'm a big believer we can teach people as much with our mistakes as we can with our wins. So that's cool. Good job. You look like you're going to say something.
I think we only have, for every trade we go in, there's only one person to blame if it doesn't work out. And that is the one in the mirror, because you were scared to hit the sell button or your conviction was incorrect. In my case for Royal Caribbean, I was counting on the economy coming back faster than it did. And I was incorrect. And so I own that. That was my fault. I don't blame the CEO.
Yeah. Yeah, I'm very similar. I'm a high personal accountability guy. I think, I suppose with AMC and here it's okay if we disagree. I do feel there's an awful lot of corruption behind this play. That's been part of what's going on as well.
Corruption in terms of the CEO and the board, or what?
No, gosh, no.
I just want to clarify. I want to give you the opportunity to clarify.
I appreciate that clarification. That's a great clarification. I am talking about people naked shorting us, and
okay,
FTDs,
I do too. I do too. Absolutely.
Yeah, okay. And even in the past, some things DD had uncovered in terms of what they were doing with the options chain and deep in the money options and some things like that. So, yeah, I'm talking about Wall Street manipulation. I'm not talking about our CEO and our board. And I would 1,000% agree with you that if I was a financial advisor, I would tell and I'm not. I cannot give financial advice. I'm an operations guy. But if I was a financial advisor, I would tell every single one of my clients, invest in companies that you believe in the long term, that you have a thesis about, and that you believe in the leadership team. And if you don't believe in the leadership team, you should not be invested in that company. Like, I would 100% say that. So, yep, I think everything you said makes a lot of sense to me.
It breaks my heart. It breaks my heart to hear all these people saying, Adam Aaron wants to screw us. I don't believe in him. Then you shouldn't be in this fucking play.
Yeah, I agree with that.
You should not. If you don't believe in him, I would never, ever, ever invest in a company that I didn't believe that the CEO had the company's best intentions at heart. Do I think he cares about me and my portfolio and making me 1,000%? No, he does. Let me just clarify, because I hear people talking about this. Adam Aaron is not trying to give me the MOAS. Guys, he does not care about the MOAS. I've said this 1,000 times. He cares about one thing. All CEOs care about one thing: saving their company or improving the profitability of their company. Now, if you're in it at the right price, at the right time, and the right catalyst happens, you could get a squeeze. We see that every damn week on many different plays. That's timing. That's good entry and knowing when to exit. I also see people ride it all the way up and ride them all the way down. Or people buy it every week. I see people buy at the top and not sell every damn week. That you need to examine yourself and become a better investor. And if you need help with that, that's what my channel and my Discord are here for, to help teach you those skills, to not fall prey to buying at the top and not be scared to hit the sell button if you get down a little bit. We talk about it all the time. Not just me. I've got hundreds of seasoned investors or people with good common sense that we talk about this stuff all freaking day long. If I'm not on camera, I'm in the Discord and we're talking about this shit. But if you don't believe in the company, don't invest in it. Day trade, again, does not matter. Day trades do not matter. A company could be an absolute wreck and you can still make money on it. The CEO could be a crook and you could still make money on it. But if you're looking at holding it for 2 years, you better believe in them. And if you don't, that's self-examination time. Why are you in the play then? His job is to fix the fundamentals of the company. They're doing what they can to do that. That their goal, Adam Aaron's goal, is not to deliver you a MOAS. But
Yeah, what
if you got a good entry and you're patient and you let the fundamentals get fixed, you might accidentally get a squeeze along the way.
Yeah, I'm smiling. I like the way you worded
The
that.
table is set. The table is set right now.
Yeah.
You might accidentally get a squeeze, but if you don't accidentally get it next week, you're going to have to learn patience.
Yeah.
Or move on to the next play. I'm not gonna hate you if you move on to the next play. You got to make your own choice.
You know, he's got something called a fiduciary duty, and there's also there should be ethics that rule his behavior. And if they go bankrupt, he's defaulting all of the lenders and frankly all of us shareholders. You know, try to research what happens to your stock if a company goes bankrupt. It's not pretty. So for me, that's also why I keep coming back to this access to capital idea that, you know, he's certainly shown now over 3 years, he's not going to let this thing go bankrupt on his watch if he can avoid it. And so then you just have to think about, well, what's he going to do to make that happen? And that, I don't know. I'm not going to repeat all our points. It kind of brings me back to a lot of points we've already made, but I would just agree with you that a sound leader makes ethical decisions. And so far, that's what I believe I see from him.
All right. Before we wrap up, because I think we've just about covered everything we could possibly cover, I'm going to give you guys 15 more minutes of questions, whatever y'all want. I have one pinned here from John. I told him I'd come back and grab his question. John said, good evening. People keep bringing up that after the split, the shorts will have less to cover. Is this true, or will, if they haven't already covered, still be at 22%? All right. That is a good question. I'm going to give you my thoughts and I'll let retail answer also. And I'm going to use math, John. If AMC is at 23% and 519 million shares, and AMC, APE is at 900 million shares at 7%, when you combine them, whether you forget about the reverse split, if you just combine those two data sets, the short interest percentage will drop. Am I wrong, retail? 7% of 900 million plus 23% of 500 million. Combined, you're going to have a lower short interest percentage than 23%.
That just sounds logical to me. I hadn't taken the time to go through the math on that myself, but sure. I mean, in many ways, that's probably similar to what we talked about earlier with the price, and same thing with the shorts, I suppose.
So yes,
as a percent, but that's not different than today. If you just think about,
it's still the exact same as right now. Like
yes,
the shorts obligation has not changed. The dollars that they owe to close has not changed. So this is what I call another straw man argument. They're trying to,
great point.
They're trying to set up bowling pins to knock you down with what sounds like a logical argument, but financially, the amount of money they owe to close has not changed.
Yeah.
Percentages, yes, percentage change.
Right. Well, let's go back to this, seesaw idea with maintaining your leveraged position. So they've borrowed the shares, and they have this open position that they're running on margin, and that overall value of their short position, whether up or down, hasn't changed. It's just the percent of this float. To your point, then you've combined the two floats and just changed the percent of the one float, but the overall short position hasn't changed in that case.
Blazin brings up another very common question. What's going to happen to the shorts on APE? What if they have to close before? Another great question. I said that this week, I guess that leaves tomorrow. I said this week I was going to call trade desks and reach out to some big institutional shorters that I know and ask this question. Will you have to close? Will we have to close? Will anyone have to close if APE is deleted and moved over to AMC? I understand the question. And up until now, up until we had the proxy, we were getting different answers. So I didn't want to delve into it till we had the proxy. Now we have it. A few days have gone by. I'm hoping that if I call the trade desks, they can give me a more certain answer. But here's what I'm guessing right now, based on having asked this question before on other plays to both trade desks and large, well-known shorters. My answer to you today, and this is just my opinion based on talking to people in the past, this is not a definitive answer on what's going to happen with AMC and APE. My answer today, I will update you when I follow through and get an update. But based on previously asking this question, retail investors, small shorts, will likely have to close out their APE before it gets deleted. Institutional shorts may be able to carry over their APE position to AMC. That is what I have been told before. I owe it to all of you guys to get a fresh update on that one more time, and I'm happy to do it.
I think that sounds pretty logical to me, but I wouldn't know either.
Remember, it all depends on the lender agreement and the lender. What is the lender willing to do? Do they have different deals over on the big boy side of the street? There's no deals on the retail side. You're probably going to have to close. Big boy side, they have a whole separate set of rules. Billy, what's up, amigo? Is Adam Aaron indifferent about the MOAS? I just got through saying, in my opinion, any CEO does not care about a short squeeze. I don't think they actively don't want it to happen. I think they don't care. What I do know is that if they are blessed with a short squeeze and they have shares available, CEO handbook chapter number 1 says, if your price runs up unexpectedly and you got shares available, issue shares. That's why whenever you see these run-ups, I see them every week. XYZ stock ran up. The next day you get a dilution announcement. They will sell into it. And I'm telling you right now, Adam has no shares to sell. So we're in a good spot. Ideally for us, if it runs up before the vote, there's like literally nothing he can dilute with. This is the best case scenario to get a squeeze right now. But if after the vote and he's got 410 million shares available, and for some reason it were to squeeze after the vote and the reverse split, in my opinion, he will sell into that, which could have a capping effect on the maximum price. Any CEO would do that, guys. That's not Adam Aaron trying to kill the short squeeze. I see it every week on different plays. I see it every week so much that I have titled chapter 1 of my imaginary CEO handbook. If a price run up happens and you got shares available, you must sell into it. That's like they all do it. So I'm only telling you that so that you have realistic expectations of what are your brackets. I want you to be thinking about that in the back of your mind. And if you held too long and then the CEO issues a share offering and you're like, oh, well, I'm telling you right now, learn to expect that on every play you're in. That's why I go back and I look at dilution tracker. What do they have? Do they have a shelf? Do they have shares sitting out there just waiting for this moment? They will sell into it. So it's not that he's actively trying to stop it. He's just taking advantage of the higher price. Every CEO will do that. Is he indifferent about the MOAS? I think he wants to save his company. He's not trying to hand you a MOAS, but he might dangle some breadcrumbs to keep you in the play. I've said that about other CEOs, many of them, and I make a lot of people angry when I say that. But guys, I believe in no CEO. People think I'm paid by Adam Aaron, I'm paid by AMC. No. Every CEO will fuck you over given the chance. They don't care about your MOAS. That was a breadcrumb to keep you in the play. They need retail. They need us. And that's fine. I'm a willing participant. But I have no illusions that he's trying to hand me a MOAS. That is what separates me from these emotional channels that are so mad about Adam Aaron because he's not delivering the MOAS. I never thought he was delivering me a MOAS. I think he's trying to save the company, and I want to be in at a good entry point and be there when that happens, or for some catalyst to catch the shorts off guard. I'll take A or B. Retail, do you have any thoughts on that question, or do
Yes,
you
just a
disagree
couple.
with anything I said?
Just a couple real quick, and then sorry, but I'll have to drop. I got to get going here in a minute. I wouldn't quite put it at the level of disagreement, but maybe just slight tweak on a take.
Give it.
I'd say
Fire away.
the spirit of what you said is right. A CEO's role, first and foremost, is sort of fiduciary responsibility to the company and to the shareholders and to any debt holders. Now we're shareholders, right? But that's not. We are in such a weird time in the market. This is all going to go down in the history books, this sort of period of time. And his responsibility is not to give, kind of runs in the stock, let's say, pump and dump type of stuff. And so that, I think I get the spirit of what you're saying and would agree with it. Maybe one thing I'd just say, and it's not even pushback, it's just a point of view that if I look at his history in terms of the past companies he's managed, the current company he's managing, things he's said, things he's done, I suppose if you're skeptical, you could say, like, he has referenced, what's the word I'm looking for? Not aggressive, but predatory short selling early on. I don't know, year and a half, 2 years ago. He's talked about some of that kind of stuff. There's other moments where I
remember.
I guess I'd put it at, and this is complete speculation. So here it doesn't even matter if we disagree. I'm just telling you a wild guess on my part. I think he's got no love lost for some of what's been happening to his company on his
Absolutely.
watch.
He does not like the shorts.
That's what I'm saying. Yes, exactly. And so if I'm him, and maybe I'm projecting too much of myself into that role, but if I'm him, I'm pretty pissed off, and I'm going to play to win. So I do believe he's playing to win. But to your point, and frankly, if he was found to actually be trying to make a MOAS, I think he'd actually be in a lot of trouble. Like, you can't do that as a CEO. You can't be out trying to manipulate your share price. You need to just deliver shareholder value through company results. So yes, I would basically agree with you.
Yeah, I do agree with you. Like, I don't think any CEO appreciates people shorting their stock. Like, you're cutting off, you're choking the jugular, those shorts. No CEO wants that. How do I know that he doesn't want it? Because he didn't file bankruptcy. He had multiple chances. He's fighting daily for the survival of this company, and the shorts are the enemy. He does not like the shorts. I will 100% agree with you. And I think I've said that many times. Yeah, but there's a difference between that and this belief in retail investors that he's trying, his obligation, his promise, Adam Aaron's promise was to deliver them a MOAS, 500,000 per share. I don't think any CEO thinks like that, including Adam Aaron.
And I think the SEC would have him real quick if he tried to do that.
If we're lucky, guys, if we're in the right place at the right time, and like I said, the table's set for a really good squeeze right now. If we're lucky, we can make a lot of money. Yeah. And the best outcome that I can envision is the price to run up really quick and really fast before anybody can react. Because, if it takes days or weeks, like people have this multi-week squeeze theory. I want a 1 day squeeze. Honestly, I'll take 2, but I don't want anybody to have time to think. I want to see massive short covering. I want to see a HKD type squeeze.
That would be wild. Hey, Tony, I just thank you so much for having me on here. I'm really sorry for dropping before you're done.
I appreciate you guys. His retail, stock retail is the channel name. He's on Twitter. He's on Reddit. His link to his YouTube is in this video description. Send him a sub. I appreciate your time and your logical way of looking at things. I hope we can bring you on again. If people enjoyed having you on, guys, go send him a sub.
Yeah,
and,
same.
Send him some thanks for giving these hours to you tonight.
Maybe if I can just leave you with a couple words, if that's okay. Just one, I kind of shared a laugh with you on maybe one of our Twitter DMs that just, I don't know how we hadn't run into each other since we both seem to think similarly in terms of this logic piece. But actually, I'm pretty encouraged by that, because there's one thing, I've been finding as I've sort of stepped more into YouTube and not just the Twitter. I think what happened is in Twitter, I sort of had a circle of people I ended up kind of, getting to know over these 2 years. And, we talk about how many millions of holders there are in this company. And sometimes you kind of forget, because you end up with your circle. Like, you guys are here in this community and you probably built a community here, and that's awesome. And I'm just encouraged by now, as I've been meeting a few new people, just apes are on Telegram, apes are on Discord, apes are on YouTube, apes are on Twitter, apes are on Discord. And there's a lot more of us, I think, than we realize sometimes. And so just kind of cool to see how big we are and how many of us are out there fighting. But anyway, thanks for having me on, Tony. Really appreciate the kind words.
Same here. We will, we'll be talking to you in the future. Take care.
All right. See ya.
1796 says, is there any way we can negotiate something that makes retail feel better about what will happen? Like how much money will be spent, how much dilution? I think those are great questions, Patriot, for you to send to Adam Aaron on Twitter or to John Merriweather on email. 100%. I have the same questions you do. And I think I sent Adam a message 1 or 2 days ago saying, can you do a corporate communication and clarify this you guys have seen it. Everybody's confused by it. That formula in the proxy where it says 1 ape equals 1/10 of AMC. That's talking about an ape versus an AMC today, pre-split. And it's very confusing. I get it. I sent Adam a message saying, can you put out a message clarifying this? Can you change the proxy? Something. No answer. Like, Adam doesn't talk to me. So all we can do is ask your questions, email John Merriweather, tweet Adam. And if enough people ask, maybe we can get those questions. Those are great questions. What's the dilution going to be? What are you going to do with the money? I don't know that he'll answer them. That'd be like giving away the playbook. But if it's burning in your heart to ask him, ask him. Yes, those are all things we could all benefit from knowing, but unfortunately, so could the bad guys. Paul, thank you so much for your super chat. I appreciate you. Speaking of which, paying the bills, I'm going to run one last ad before we finish up here. Let's see what other questions we have. Spaceman says, thanks, Stock Retail. I've never heard of you before tonight, but I'll check out your videos. Yeah, I actually never heard of him. He said he's been on Twitter for 2 years, and I've been more on YouTube and less on Twitter. But the more I am involved in Twitter, maybe I ran across him there, or maybe one of my Discord members told me to watch one of his videos. I don't know how many. He has only got a handful out. But go follow him on Twitter also. When I saw his tweets, he's got 6 videos. When I saw his tweets, I was like, this guy actually thinks logically. Like I find a lot of agreement, and we need more people that are financially looking at these plays, logically looking at these plays to help everybody improve yourselves as investors. If you plan on being around after this play, there's so much opportunity to make money if you can kill that emotional side of yourself. I know it's tough, but you will always be screwed if you're getting in every play with emotions, if you're buying late, if you're refusing to sell while it's dropping, you're not going to be long for this game. So I want to help you up your game and get some more strict rules about trading. Pass it up if you missed it. Sell if it's not going your way. Don't put too much in one play. I saw you talking about this other Lisa AFA. Who was it that bought them? I would need to go back and look that. I saw the other ticker that you were talking about, but I'm not familiar with that transaction. So I'll have to go back and look at it. KYP says you've tried too many times to ask Adam. Yeah, I've sent Adam a bunch of DMs. He's never answered one. I don't know why people think I'm in contact with him. He's never answered me. Why don't I have a bartender at my local AMC? That's the most frequent question I ask them. Do I see this overall market pump a fake out, considering all the blue chips missed earnings today? I think we are on the cusp of the bear market being over. You guys know I said that we need to get through Q1, through this earnings cycle, which I kind of pin through March. But this week was very encouraging to me. It made me step a little bit more towards, like, I did a lot of buying today. Did a lot of buying. I added to positions. I did more day trading than I normally do. I was encouraged by today, but I'm not all the way there yet where I'm going to, start putting it all on the line. So I'm encouraged, but I don't know. I'm more conservative than many guys because I've been doing this so long and I've been through so many recessionary markets and watched portfolios get wiped out, not just for me, but millions of people, that I've learned not to play free and loose. Like, to being capital preservation is key to stay in this game. So I feel better, but I don't know that it's all green lights just yet. By the way, made 41% on GTII today. That was my best trade of the day. I bought it yesterday, sold it for 41% today. 40% in 24 hours is not too bad. Galen says, I like it better when you don't have any guests. A lot of people hate me, Galen. Sometimes it's better for you to hear someone else talk, so it doesn't seem like I'm being paid to tell you something. I like having guests on, but I enjoy chatting with you guys too. I thought a lot about coming on live today. I was heavy in the Discord and I was sitting here trading, but it's also difficult to do a lot of day trades and make the smartest choices when you're distracted with trying to answer 1,000 questions. So I debated. I said if AMC went over 8 or APE went over 4 today, I was definitely going on live. So I'll extend that to tomorrow. No matter what, if we get AMC 8 or APE $4, I will be on and we'll do a shot or two. We're in great position for continued run up. Volume's looking good. But we'll have to see what the market does in the morning and what earnings we have tomorrow and how they look. And beyond that, whatever day trades we have going on or swing trades, I'll be talking about those in the Discord. Try and get up at, if I can, 5. Sometimes I'm not up till 6. Depends on how late we're doing the live streams or how late the wife keeps me up. As soon as I get up, the very first thing I do is see what is running and post it in the Discord. I know some people made money on that this morning, the ones we called out early. Any thoughts on GNS? GNS is still in play, Bernard. They still have retail momentum, whether or not it's a legit company, whether or not he's really is he really going after naked shorts, or is he just doing what he can to benefit himself? This whole thing of don't trust any CEO. I don't trust him. I don't have anything against him, but everything he's doing is to benefit his company. Like I've been posting for many, many days about the increased outstanding shares, the increased float in GNS. I just saw today, he just realized that the float had increased. Like I've been posting about this for a long time, and the CEO just discovered it today that all the convertible notes were sold into the market. That means you guys bought the debt from a institutional debt holder. They diluted the stock, dramatically increased the float, and you bought it, and the price got capped by that, and you got an institutional debt holder off the hook, and the CEO is loving it because you improved his balance sheet, that whole balance sheet improvement. Is he doing all of this just to improve his balance sheet, or does he really think there's naked shorts? Well, I don't know, but I don't trust any CEO. When will I trust him? When he shows us the evidence that Share Intel got. That's when I will trust him. Until then, he's on the fence with me. That's neither here nor there. As far as the company, the investment, the swing trades, follow the momentum, follow the chart. Get your moving averages, get your 1348, your 200 moving average, your EMA, whichever you like. The MACD, the RSI, those are the ones I use, just basics. That's all you need. These things are very responsive to those things. And then watch the news. Watch the news and the press releases. Speaking of which, I bought some Cosmos today based on, they just had a press release about a listing to Upstream. Now, when they dropped that press release, the market was starting to go down. So Cosmos went down a little bit after I bought, but not as much as the overall market. So you might want to check into Cosmos, COSM, as a potential play if that gets some retail push behind it because of the Upstream listing. There have been other plays, including GTII, which people like that. I'm not in these plays because I think Upstream is going to make a difference. I think it will make zero difference for Genius or Cosmos. But I don't care about that. I care about what does everybody else think. If retail, look, I'm a small channel. It's not going to hurt anybody by me saying this. I want you guys to do the smart trade. If everybody else believes it, that it's going to make a difference, we can trade off of that. And I'll be out before they're out. I'll be out before they realize it didn't make a difference. I just want to make money. And I want to help you do that. And yes, if Cosmos doesn't work out tomorrow, I will be selling it because when I bought it, I already knew what my pain point was. If it goes down, I'm out. No questions asked. My thesis was incorrect. And maybe if it's a bad market day, Cosmos goes down with the entire market, I'll sell at a little bit of a loss. Not a big deal. When it bottoms out based off the technicals, I'll try a re-entry and see if I can make that money back. A lot of my analysis is not just one ticker, but I'm looking at the overall market, the economy, world news. There's a lot of things for me besides if I'm carrying overnight, there's a lot of things that I analyze. If I'm buying it for 10 minutes, I don't care. Yeah, SMK says 13.8 is a free indicator. It's very easy to set up, guys. If you're any of your brokers, no matter what you're doing, no matter what broker you're using, you don't need to pay anybody for 1348. But I've been back testing it and watching it for a long time. I use it on some of my charts, and it is a little bit laggy. Sometimes you can use other indicators to get an entry before 1348 shows a upturn, but almost every time once the 13 crosses, it's going to run up for a while. You might not get in at the bottom, but if you get in once the 13 crosses, you're probably going to be okay. Just go in and turn on 13 and 48 EMAs, and you can do that for free. There is zero reason to pay anybody for that unless you just need somebody to hold your hand. Sorry about the slow mode. It does help me catch as many questions as I can. Traders Anonymous says 1348 is a small part of what you can use. Absolutely. Don't rely on one indicator. You will find the toolkit that works best for you. Try a bunch of them. Listen to different channels, see what they're using. I use a combination, like I said, of for my day trades, a 1 minute chart, 5 minute chart, both side by side, looking at volume, looking at the candles, looking at 260-day moving averages, and 1348 or some other smaller frequency moving average. MACD, RSI. A lot of times, though, I'm for scalping or day trades, I'm heavily looking at volume besides that other stuff. If volume is falling, I'm getting more nervous about staying in that play. You don't have to pay $69 a month. Amazing. No, you don't. Can 1348 be tweaked to work better? Headstock, it's one of many tools in that set of the lower frequency measurements that you can use. It's not the absolute, but it works, and there's nothing wrong with using it. Yes, RSI and MACD. If you see my chart here, let me put it back up on the screen. I've got the I do have the 1348 on this chart. Let's go to a 5 minute. You can see right here, 13 is the purple, 48 is the orange. I've got the 60 and the 200-day moving average. So you can see where all of these things, where the candles drop below, you start getting some negative momentum on AMC. I've got the RSI right here, and I've got the MACD. And of course, your volume candles down here. Over on my day trading tab, where if I'm really closely watching something, this is the same ticker, but 1 minute chart and 5 minute chart with all the same indicators. 1348, got the VWAP on there, 200-day moving average, the RSI, and the MACD. If you guys would find it helpful for me to walk you through some examples on a video, one day I'm happy to do that, a day trading video. Did I say GME is out for a while? What do you mean? Like, is it not a play anymore? I don't think I said that. Is that what you meant, Angelina? I did not say that. I have my buy. Let me go to the daily. I have my buy brackets for GME, these two yellow lines where I would like to be buying it. It dropped way below those. So if it dropped below, I was worried it would go to 9. So I was not doing buying on this downturn. But now we're back in my comfort zone between 22 and 29. And I will be waiting. I'm long on GME. I'll be waiting for a breakout above 29 if we get there to rotate out of that position. And hopefully, ideally, I'd like to be holding GameStop when Ryan Cohen does his transformational announcement. For me, GME is just another trade. I'm not a big fan of big retail brick and mortar stores that are dependent on inventory. So for that reason, I'm not a big fan of GameStop. They're not profitable. They don't have debt. They've got 10 quarters of cash. They're okay. They're in an okay position. But I'm in this play for the squeeze when Ryan Cohen makes that big announcement, the one we've been waiting for a year and a half now. So hopefully I'm long in it. When I say long, I don't go short GameStop, but there have been times where I've sold and waited for a pullback. I'm just trying to maximize my profits. I'm not emotionally tied to GameStop. It's a swing trade for me, but I've been holding it now since when is this? Since September. I bought in September, I bought in November, and I bought in December, and I'm still holding all those. So I wish them a lot of luck. I'm anxious to see the next quarter, and I am hopeful that it will be good. If it's not, well, we'll find out. Headstock Karen says, picked up GME at 17.17. Yeah, I should have grabbed some after it bounced off of 15. I should have. Shoulda, woulda, coulda. But I've been buying other blue chip stocks. Like I've got enough speculative plays. I'm really trying to beef up my Amazons, Apples, Metas, Teslas, et cetera, while things have still been cheap. All right, guys, I think I am going to call it a night. Scarlett will be happy that I'm done before 2 a.m. Luke says, Tony, is it possible for them to buy APE going into the conversion to convert their AMC short positions? For institutions, Luke, it might be possible. Might be possible. Yeah, I talked about that earlier. I'm going to dig into that some more. I owe that to you guys to get a fresh update, but I have been told before by institutional shorts that I know that when that type of conversion happens, that they don't need to close if the lender agreement allows them to move it over. So I will check again just to make sure I'm giving you fresh data. I think retail will be forced to close. Institutionals, I'm going to say with an asterisk, I don't know. But I don't think that they will be forced to close. And really, I don't care because the short interest on APE is so low. It's like 7%. It's like and the cost to borrow is low. It's really like it's like an afterthought. But if your question is, could they just short a bunch of APE and then, have shares of AMC? Yeah, I mean, it's a valid question. I get it. It's quite possible. Traders Anonymous says, before I left my job, I started trading, learning the 14.8. Now I am a day trader full-time and profitable as fuck. That is what I like to hear. It is tough to do it profitably, but I think, the biggest, you probably have learned some of the skill sets, like learn to not be emotional, learn not to buy at the top, learn not to FOMO. There's so many plays I pass on that are up 90%. I'm like, nope, that's up too much for me. Like if I can catch it in the first few minutes right after a press release, if I'm up early enough, I'll jump in. But I never lose a moment of sleep about a play that I missed because I've seen too many of them where I watch them all. I've seen too many where at the moment where I'm about to hit the buy button, if I'm like, let's just see what would happen if I would have hit the buy button right here. That's always the moment where it tanks. And I don't want to be that guy. I don't want to be turned into an investor when I was just meaning to scalp it. Oh, I'll just hold on to it for 5 days and see if it comes back. No, they never come back. 1 out of 10 come back, but let's be real. You got to catch them early. Have some technicals that you follow that work for you, and don't be greedy. Someone said today, I forget what ticker it was in the Discord. He's like, I'm really, really up on this play, but I think it could go further. What should I do? And I was like, well, If you're really, really up, sell part of it and lock in a profit. And if you really in your gut think it could keep going up, let a little bit ride. There's nothing wrong with that. That's called brackets. You don't have to sell it all, but for sure, like at least cover your initial investment. And if you can add some, if you can take some profit on top of that, then everything after that is gravy. Even if you were wrong, even if it goes down, it's still profit because you already locked in your original investment. So that is a strategy that you can utilize, Saheb says, will selling covered calls, will the percentage return be the same post split? I haven't thought about that, Saheb. And I'm not a big fan personally of selling covered calls on a play that I think is going to squeeze, because I don't want my shares yanked out from under me. I mean, that if you sell covered calls, they could exercise those calls. And in the US, even though it's not common, they can pull them away from you at any time. They don't have to wait till expiration. All right, ladies and gents. Thank you for tuning in to the most hated AMC YouTube channel. I mean, tonight, honestly, I don't consider myself an AMC YouTuber. I know a lot of people do. A lot of people think I got people into this play at $70. No, I was not around when AMC was, I was not YouTubing when it was $70. I never convinced anybody to buy in this play. I'm here because I'm angry at the clickbait. I'm angry at the people that do the pump and dump or tell you to buy in stuff at the top and then make you a bag holder. My hope is to help each and every one of you, no matter what happens in this play, become better traders for the next ones. And what else was I going to say? Anyways, I want you all to be successful, really. Oh, I know what I was going to say. My content mostly is about what you're asking questions about, be it on Twitter, Discord, emails that I get, questions in the chat. It so happens that right now a lot of you are asking questions about AMC. Do I consider myself an AMC YouTuber? No, not really, but there's a lot of you asking about it. So I kind of gear the content. You can go back and look at all my videos, look at the lives. I answer questions on hundreds of different tickers. I have a wide portfolio. I don't know every single stock. I don't know every single company, but if I know it, I'll give you my opinion on it. And at the end of the day, you guys drive my content. So as long as it's AMC stuff, well, yeah, there might be a majority of my content, more than 50% about AMC, but rest assured, in my heart, this is not an AMC channel. This is a making money channel. I sit here every day doing day trades, doing swing trades. I love real estate, entrepreneurship, owning your own business, getting financially free, getting debt free. And I even talk to the guys in the Discord about Andrew Tate type shit. We don't need to go there. I'll get demonetized, but whatever you guys want to talk about, I've got just a little bit of life experience over some 20-year-old with a black dildo in the background. Not as entertaining, I get. You're going to hate me sometimes, but I'm going to shoot you straight, and I'm going to tell you what you don't want to hear, because it's going to make you a better trader at the end of the day. Thank you all. I love you. Remember, let's focus on DD. Let's not do personal attacks. That's a big problem going on in social media right now. Nobody ever wants to talk to me about due diligence. They just want to, do personal attacks. Those people are afterthoughts in my life. I don't got time for that. I encourage you, if you want to be active in this channel, to I want you to think the same way. It's always fine to disagree on stuff. You like a play, you don't like a play. You like a CEO, you don't like them. but there's not going to be any tolerance here for drama or attacking other people. So I hope to see you all again. I hope you got some value out of this live stream. Thank you again to the guests for tonight. Hope you go sub to Just Another Ape and Stock Retail. And I will see y'all in pre-market tomorrow. And if the gods are with us, we'll get some live streaming during the day for trading tomorrow. Cheers and have a good night, guys.